And ladies and gentlemen, here we have it. And so some of you are starting to find out the hard way, listening to these YouTube investment gurus, it's going to cost you big. It's going to cost you really big. And let me just mention, I've got a lot of emails. Of course, I'm not that active on here. In fact, it's just, I doubt I'll even be posting anything in the future over the next couple of months. It just depends if I'm inspired to do so. I'm busy. I'm a professional research analyst. I have a real job. I provide research, investment research, economic research for investors. I've been doing that. This is my third decade. And so the people who are spending every day on YouTube churning out videos, they don't have real jobs. Now, some of them are trying to escape their job, thinking they can become YouTube stars, and they're pumping out all kinds of videos. Folks, if you've got someone who's giving you, and this is the same thing, I exposed this 15 years ago. 15. Ask yourself, how many of you were even investing 3 years ago? I exposed this whole situation with the guys in the media. All the guys that the media talks about, and they tell you that they're really accurate and they're right a lot, and you should listen to them because they're really smart. I'm not going to get into that scam. I exposed that 15 years ago, and I was exposing it for many years, what's going on with the media and their buddies. But I mentioned, for instance, a guy like Peter Schiff. I said, wait a second. Forget the fact that this guy's always wrong. He's a contrarian indicator. Do the opposite of what he says, and you're going to make big money. And I think that the same applies to these clowns on YouTube. But the point I was trying to make is that, of course, Mr. Schiff has got a real company. He's got a real investment firm. I don't agree with much of anything that he says on any basis, whether it's investments or politics. But nonetheless, that's what he does. That's his job. He's in the industry. Calls himself an analyst, an economist. Yet, he's spending all his time giving interviews every day, all day. So how does he do research? How does he know what's going on? You see, folks, these people are professional speakers. They're pumping out content. Garbage content? Yes, but they're just blabbering. Blah, 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 blah. So when you have guys like me, Kevin, who are always pumping out garbage, ask yourself, well, Kevin, we should see a lot less of you because you should be trying to research things, see what's going on. Folks, that's not the game. The game is to fool you. You understand? People that are blabbering their mouths all the time are the ones that don't know shit. They're trying to pull you in. And you have to use your head to think about what's going on. And I can tell you, even if Kevin or any of these other clowns on YouTube try to research, they can't do it. They're not equipped. They're not experienced. They have no idea what's going on. And you all should understand that. And you got, I could talk about these clowns for a long, long time nonstop. I haven't even paid attention. I haven't even watched any of his videos, I don't think, in months. Because all these guys, whether it's Tom Nash, the fake analyst, or Kevin, the clickbait con man, or Graham Stephan, clickbait con man, any of these guys, if I watch just one of their videos, I could spend hours just chopping it up, showing you the amount of disinformation and garbage. And each of these guys have their own little scam portal, their own little scam strategy. I want you to understand that. They all have their own scam strategy, but they're all in the same circle. It's circle jerk. You understand? So one guy gives you kind of a panic paranoia. Folks, if you're following the market on a daily basis, absorbing all this garbage and trying to respond every day, you're going to lose everything. Okay, that's a short-term trading approach. Short-term trading is going to result in complete losses ultimately for, I would say, 999 out of 1,000 people. Okay, there's other approaches, other strategies, scam strategies. Other guys are clickbait content, where you got the subs and you just put, hello everyone, how you doing today? And they just talk about stupid things you're not qualified to talk about. It's not accurate. I consider that a scam. It's advertising scam. It's an advertising fraud. They're just trying to drum up the ad revenue, and that affects consumers because consumers have to pay higher prices for goods and services because these companies are spending their ad revenue on a bunch of clowns who are providing scam content. People clicking on that. That's fraud. Of course, YouTube doesn't care because they make money off it, as you can imagine. Experience is useless. Yeah, okay, experience is useless. Well, how about track records? I got one of the best in the world, my friend. Anyone who says experience is useless doesn't have experience. That's pretty obvious to me. You think you don't need any experience? Yeah, okay, no experience needed. Let me tell you something, in case you all don't know this, investing in the stock market is arguably the most difficult thing to do consistently right in the world. Arguably, okay? And the reason why I say that, think about some of the most difficult things in the world to do. What might they be? Intellectually challenging, right? What might they be? Everyone's going to have a different opinion on that. I think that probably most people are going to say, well, something, in the sciences, like a physics, chemistry, something like that. Very, very difficult, right? But the thing is that something like that, you have the rules in front of you. You can learn all that stuff. Either you're going to get it or not. Investing is constantly changing. Okay, it's constantly changing. I know that I can get more views if I have comments. Understand something. Let me kind of reiterate something since some of you don't understand what's going on here. I'm not here to build a channel and to monetize and make money and to promote myself. I'm not here to do that. I'm here to do something that a normal, decent human being could be doing. You see, I'm not here for my own self-interests at all. Okay? So I don't care about growing my channel. Now, let me explain another thing to you that you might not like, but I've learned this over a couple of decades dealing with people. And I'll just go ahead and begin by giving you a little analogy, if you'll bear with me. So let's say that you go to your doctor, and your doctor gives you a diagnosis, and you start debating the doctor back and forth. How productive is that going to be for the doctor? Right? What's the point? Right? Or let's say you're in a course as a student, high school student, let's say, or college student, and something, you've got a professor there who's a known expert, actually, in his field, and you start debating that person. What good does that do? Right? My point is this. You and I are not on equal footing when we're talking about the investment landscape. I don't need to have people post comments that are disinformation, so I have to go through and filter the comments, respond to the comments, and all the garbage. I don't need that garbage. I don't want people to misinterpret anything that I say. Okay? I'm the authority. I'm speaking my voice. If you like it, great. I hope you get some benefit out of it. If you don't, you don't have to listen to it. That's kind of the deal, you see? That's the reason why. And when you're a world authority, really, if you look, say, at an editorial or an op-ed piece from typical experts, do they have a comment section? Typically not. You see, I'm just not going to waste my time with a lot of uninformed, poorly informed, misinformed people. I'm just not going to do that, you see. And I shouldn't be in the position for anyone to even ask me to do that. You see, that's the situation. Yes, yes, sir, Mr. Schaefer, I understand your situation, but I'm just telling you, hey, you know, the fact is, Mr. Schaefer, that if you want your channel to grow, you have to persistently pump out content, you see. Other than people like you who might feel that my message is important, you can spread it on your own. You see, I can't devote my life to doing this. I'm actually semi-retired. I've been semi-retired now for about 8 years. And I only work just to service my existing clients. So I'm not going to spend my time, battling this huge army of scammers and fraudsters. And let me just mention something, a couple things. First of all, I never, and I will never give away any of my research on YouTube for free, ever. Don't do that. Anything I say that might be taken as a forecast or research is not, okay? So don't make that mistake. The second thing is, and this is not research or forecast, but I'm just telling you guys, and I warned people a few months ago. I said, you guys, if you think the markets are down now, and this applies to today, you think it's down now, it's just beginning. Some of you have no idea what's going to happen. I already put out the bulletin back in January, and then early February, 2 weeks before the war broke out. In fact, you see today, one of these stocks, Palantir, I went on video and said when it was about $20, $21, I said it's going to $5. Hell, it looks like it's going to $3 now with a reverse split. There's so much garbage out there. Some of you don't really understand what's going on, and I get that. I understand that because it's hard to know what's going on if you don't have the perspective. And I get all that because I was in the same shoes as some of you once upon a time, you see. I was in the same shoes, and thank God when I was in those shoes, there wasn't the YouTube, because I might have gotten sucked into the same garbage as well, you see. So, I'm not blaming anybody for getting sucked into this shit. I'm blaming the people who are profiting off this, who are not qualified, who are sucking people in, who are making money, giving really irresponsible, misguided advice. That's who I'm blaming. And anyone who wants to take up for those people, I think that you're on the wrong side of the fight, really. I really do. I mean, you have people, and I haven't even looked into it, but apparently, I think I ran across a few months ago, guys like Meet Kevin advising people, talking about going on margin and selling puts. And I ran across someone today, actually, and I apologize, by the way. I've gotten many encouraging, wonderful emails from people. I haven't had time to respond to many of them. Let me just go ahead, and I'll get into that in a second. Let me just go ahead and mention something. I got an email I just checked today. Like whenever somebody loses money, nobody, I don't feel good. I feel bad, because you've been there, and when you hear these stories from people, it's like it's pretty screwed up. You don't want to hear it because. But somebody sent me an email today, and he told me how he had lost everything, basically, just about on Palantir, because he followed Tom Nash, and. And a lot of these people, not everybody, but a lot of these people, they're vulnerable. And this is the problem. They're vulnerable people financially, emotionally, mentally, and, so they're already starting the game at a disadvantage. And that's who these people on YouTube, that's who they go after. In fact, I haven't done a video on this because I didn't have the time, but I was going to do a video on, I did one on this Max Mayer scammer, bullshit artist, the former movie guy. He used to move furniture. Now he's a guru in the stock market and cryptocurrency. And I looked at his channel, and I noticed something similar between him and me, Kevin. Both of them, 2 years ago, approximately, about almost 2 years ago for a while, they were actually making daily videos talking about economic stimulus. And I actually remember running across this Kevin guy back then, and I'm thinking, like, why is this guy talking about stimulus every day? It's like there's only like one coming and maybe another one, and they would do it every day, and they were clickbaiting people. And they were going after the lowest hanging fruit, the most desperate, vulnerable people looking for stimulus money. And that's how they built their channel, both these guys. That's disgusting. It's disgusting. And I can tell you right now, if I had any authority, if I was with the State Attorney General of California, I would already have sued Kevin right now. This guy could be in deep trouble with people complaining. I guarantee it. And the funny thing is that this guy is, anyway, I don't want to focus on that guy. But you have to understand my perspective in this whole game. And by the way, I am a Wall Street insider, but I am not. I don't work for Wall Street anymore. I've worked for Wall Street. I'm actually very anti-Wall Street. But I can tell you this: as criminal as Wall Street is, they don't target specific demographics. They're just greedy. They just want to make money. They're greedy. When you have people on YouTube targeting specific demographics to exploit the most vulnerable people, and this is what's going on with many of these people, giving all this stock advice and all this crap, it's disgusting to me. Yes, Mr. Schaefer, you're exactly right. Kevin and Superstar, yeah, Superstar Max. You know what? They do go after what the hottest thing is, but everybody's doing that now. Actually, this is what they all do. In fact, I was actually running across looking at some videos today, and apparently, these travel vloggers. These travel vloggers are all scumbag, e-beggars, and scammers, especially the ones from the Western world that go to Asia. Right? Every single travel vlogger, I'm telling you, in Southeast Asia is a scammer or an e-beggar. They're all uneducated, unemployable in their country, scammers. I know this for a fact because I've been following them for many years. But the point I'm trying to get at is every single genre, what's going on with YouTube now, because YouTube's cranked up this whole ad game into high speed. But what I notice is that now the trend apparently for these vloggers is to go to the Philippines. They're all going to the Philippines. You know why? There's even a guy who made a video, I think. He said, yeah, everyone's going to the Philippines because that's where all the ads are. That's where all the clicks are. Everyone's clicking because all the Filipinos, they want to hear good things about their country. You see? So they're all actually choosing their destination based upon where they can get all the clicks. Most of them were going to Thailand before, but that's all played out. So all these guys on YouTube, they're going with whatever the topic is. And that's clickbaiting. That's a scam. In my book, that's fraud. Okay? And YouTube, of course, they're partners in this. Something's got to be done about YouTube. Something has got to be done. I'm telling you right now. And I've talked about this before. I've been following YouTube for a very long time, folks. I remember when YouTube was good. It was good before Google bought it, before it was monetized, when people posted videos because they wanted to. Now it's all about how much money they can make. And they don't care who gets hurt. They don't care what type of BS they post. All that matters is you can't say things that aren't politically correct. You can't say certain words, right? But you can scam the hell out of everybody. It's pretty disgusting to me. But Scott, you don't understand exactly what's going on. And yes, India does have a lot of viewers, and that there are people who have gone to India specifically for them. I don't know that you understand the full spectrum of the scammers of these vloggers. You have scammers like Harold Balder. Yes, he's a scam artist. I ran across this guy like 6-7 years ago when he was making all this libertarian nonsense and all these false claims. This is a guy who goes on cam, he goes to India specifically because he knows he's going to get a lot of subs, and he passes out money. Oh, he's a nice guy. Listen, folks, if you're doing real charity, people don't know about it. Anyone who gets on video and shows themselves giving somebody money or something is doing that. They're a scumbag. They're doing that to try and buy positive PR so they get donations. This has been going on for a long time. Okay, and there's all types of scams going on. Believe me, I don't think you understand. Okay, go and check some of these channels. Sunshine Shoulders in the Philippines. He's running all types of scams all the time. You don't know. They've been running scams for many years. Charity scams, feed the children, all baloney. I'm telling you. So there's different types of scams out there. I think maybe there's about 5% of YouTube remaining that's got some quality stuff on it. But it's far and few. It's just getting worse and worse and worse. I would have said, maybe 5 years ago, I would have said, maybe 30% of YouTube. It's just, gradually, because the reward system is favoring the clickbait trash. And this is a big problem. I agree. I agree. It's not the same. It's not the same type of fraud, but you have to understand that the clickbait it's a lead-in. It leads you into the cove, right? Just like me, Kevin, and Max, when you go back and look at their old videos. They were posting all these bullshit videos, clickbait videos about stimulus checks like every day in 2020. And once you, so you can say, well, that's clickbait. Okay, that's a little ad fraud as far as I'm concerned. But it gets worse because they've gained subscribers, and then those people they're tied in to their peer scams. You see, that's the problem. I mean, all this stuff, you have to think about it. You've got these people, they're very devious. They know exactly what they're doing. They're not trustworthy. You're talking about people, and by the way, I'm not just talking about the guys with a lot of subscribers. You've got the small guys who are starting out. They want to climb the same ladder, and they pretend like they're calling them out. They pretend like they're calling these guys out, and then, the next day they're talking about stock analysis. They're like complete hypocrites. It's just, folks, I essentially said the same thing when I got on YouTube and made these initial videos. The game is so obvious. It hasn't changed, okay? It's the same dog and pony show. And if any of you out there have any type of moral conscience, you might want to start your own channels calling these people out. Really. I mean, it's just, the emails, I should actually read the emails. Some of these people have lost so much money, and but anyway. Yeah, Dan S., that's correct, okay? Let me just tell you something, sir. And I've mentioned this over and listen, folks, with my knowledge, and I could just post you guys, I predicted the financial crisis in complete detail more than anybody, more accurately than anyone in the world. I talked about the trade with China and the toxicity. I wrote about that 16 years ago, okay? I've been ahead of the curve on everything. I can sit here and market myself. I'm not here to do that, you see? Because first of all, I don't want the YouTube crowd as customers, because I don't think most people understand the investment process. I can give you the best investment research in the world. It doesn't mean you're going to do well. You have to understand things, and you have to pull the trigger on your own. You have to understand how to profile yourself. You have to understand suitability. None of these idiots talk about that. And it's shocking. You've got guys who claim to be former Wall Street analysts, like Tom Nash. He's a complete liar. And tell Tom, I've got 10 grand I'm going to give him. He can prove to me. $10,000. You see? You got these guys. He was not, I can guarantee you, a Wall Street analyst. He doesn't even understand, by the way, how the inverted yield curve is a supposed predictor of inflation, of a recession. He doesn't understand that. I actually heard his video. I haven't had a chance to do a video on it. You have to be a numbskull. There's no way any legitimate securities analyst is going to come out and say that an inverted yield curve causes a recession. There's only one pinhead I've come across before that said that. A guy that I exposed starting about 12 years ago, named Michael Pinto. Okay? You can find him on YouTube. I exposed the whole guy. He worked with Delta Global, which was shut down for fraud. He ran over to Peter Schiff's firm, was canned over there after about a year. He actually claims that as well. Maybe that's where Tom got the information from. Inverted yield curves don't cause inflation, folks. That's fact. Anyone who says that doesn't understand what's going on. Tom Nash, I don't think has ever even worked anywhere near the capital markets. For him to say that an inverted yield curve causes inflation does not. Everyone knows that, right? You all understand that? Why look at the Dow Jones over the S&P? Look, let me tell you why people look at the S&P. I still look at the Dow. When I say the market, I mean the Dow. And I think the old schoolers still kind of stick with the Dow. But the only reason why the S&P has kind of been the focus, anybody know? I'll go ahead and ask the question. I know some of you are going to get the answer. Anyone know why the S&P has kind of increasingly gotten more of the focus over the past couple of decades? Anybody? I'll tell you why. It's only because of indexing. That's it. That's it. It's only because of indexing. Because the S&P is used as benchmark. The Dow's not used as benchmark, you see? That's the only reason why. So you didn't have nearly the extent of benchmarking in all these index funds 20 years ago. You didn't have that. BlackRock, which controls, or let's say dominates, they dominate the ETF industry. BlackRock is, you all know the history of BlackRock. I did a feature on BlackRock, research feature, on a video feature, 2012, as one of the great companies. BlackRock is traditionally a fixed income manager. I dealt with BlackRock at Bear Stearns. They are very good at fixed income. That's their forte. And you see BlackRock got into the ETF business, which has been a big boon for their business. You see, most people don't realize BlackRock is actually fixed income. Because if you don't know BlackRock and haven't been in the business all this time, you just think of BlackRock as having iShares and all this stuff, right? But that's why is the S&P has got all these benchmarks, and not just the S&P 500. You've got different sector funds and all this stuff. This is why everyone focuses on the S&P. Okay, but I still focus on the Dow, and I can tell you. Can anyone tell me how many dog shit stocks the Dow 30 has? Anyone? So take a look. Tell me how many dog shit stocks are in the Dow. Okay, the Dow is an elite club. The S&P 500 is not as elite. How many dog shit stocks are in the Dow? Anyone? This is just opinion. There's no right or wrong answer, right? We can go back and forth in debate all day, right? There's none. There's none. Now, can you say that about the S&P 500? I don't think you can. Let's talk about valuation. How many really overvalued stocks are in the Dow versus the S&P, percentage-wise, right? So you get my point, and this is where perspective comes into play as well. Does anybody know back in the dot-com bubble what sector had the highest composition in the S&P 500? Quickly, anyone? And can you give me that percentage? I'll go ahead and tell you. The financial industry. Exactly. Very good, Mr. Cole. It was the financial industry. It had about, it depends upon when you were looking at it, but anywhere from 42 to maybe over 50%, right? And so I haven't looked at the S&P in terms of that now, but I mean, you can just think of the big tech names, right? You can, take a look. You see, it doesn't take many rollovers in leadership to cause the S&P to fall. In fact, I told my clients a while back when I declared a bubble in the Nasdaq, actually, and I talked about how these things come in phases. When you get a bubble blowout, what you typically see is phase one, the dog shit gets blown out. We saw that last year with SPACs, gaming, right? 70% down on average, let's say. And then what you get is phase two. You get good companies that they miss on something, some type of metric, whether it's earnings or subscribers or growth or forward guidance is maybe not so positive. And the sentiment, from that alone, the sentiment, you can tell is very screwed up. Great example is Netflix, okay? It's a great example. That should tell you where the sentiment of investors is, okay? And then the next phase, right? And of course, after that, we got what? Right? We got PayPal first, Netflix, then PayPal again. Then what did we get? Actually, before all of those, we got Facebook, right? And then more recently, we've got Amazon and Google, right? And you know what the final phase is of the blowout? It's when Tesla gets hit, and Microsoft, and Apple. That's how it works. And they all go down about the same amount, generally speaking. Let's say 50 to 70%, something like that. I'm talking about a pure bubble blowout that is intersected with a recession. So we may not get a recession, right? Chances are greater than 50%, I would say. But if we don't get a recession, it doesn't matter. Just about all the stocks are going down at some point in time. So you might buy something, okay, it's looking good now, right? But then later on, it's going to go down. You see? And especially, of course, I'm talking 50 to, I'm talking the tech stocks, really, the blowout, the tech stocks. That's typically how these things play out. And this is just amazing to me. Nobody on YouTube knew this in terms of what I'm going to tell you now. It doesn't matter if we get a recession. It doesn't matter. You know why? The market's going down substantially anyway because interest rates are going up. You're getting multiple contraction. That's what happens. And especially when you overlay that with a bloated valuation and you've got these people. I mean, you understand, folks, I mentioned this before, perfect storm. In fact, I think someone told me, other people are copying me now. I mentioned the term a while back. Perfect storm bureau. I'm not going to really get into it so much. But, when you've got everyone that thinks that they're a stock genius, that's a sign of a major bubble top. Okay? That's a sign right there. Now, so the problem is, by the way, this. Well, Apple may not crash. It might not. It just depends upon a lot of things. But I would say, my point is that the point I'm trying to make is that what happens in these blowouts when you're talking about a gross exaggeration in valuations, and then you have like all these kids. I mean, in the dot-com bubble, everyone thought they were stock genius. Soccer moms were getting stock advice. Elevator attendants were getting stock advice. Cab drivers were getting stock advice. Hell, at least back then it was adults. Now every 21-year-old thinks they're a stock guru. And no one even realizes, I suppose, but you can look it up and verify it, the human brain does not fully mature on average until about age 28. I'm not going to listen to anybody who's under 30 ever for anything related to judgment for that reason alone. In fact, I wouldn't listen to anybody under 40. But what I'm trying to say, folks, is when you get these blowouts, right, that coincide with the recession, it gets really bad. And the problem is that just about all the stocks, or I'm not going to say all the stocks, but a lot of the stocks, especially in the tech space, they come down by about the same amount. So what happens is that you get the dog shit, and I can't even believe you have people recommending Peloton. Folks, go back and save videos. They're going to remove them. I mean, Peloton, I dug that as garbage dog shit from day one. It's just obvious. It's obvious. If you don't get that, you got a lot to learn. But my point is that you're going to sit there and look at Peloton down. Peloton's extreme. They're probably going down, 90%, maybe even go bankrupt. You never know. But you're going to look at stocks like Peloton, and they're going to be down the same amount as stocks like PayPal or Netflix from their highs. And so when you're seeing all these things, you can't decipher anything. And all of a sudden you realize, and I mentioned to people, I said, if you think it's worth this, when these stocks fall, you're going to ask yourself, what's it worth? You don't know what it's worth anymore. You see? So people can't decipher what's going on. And what's going to end up happening for a lot of people is they're going to end up getting blown out, and they're going to never go back to the stock market again. That's what's going to happen. That's just what's going to happen. It's unfortunate. And so the people who are going to make the money are these YouTubers. They're the ones making the money, not you guys. You're the ones empowering these people. And I mentioned before, there's all types of scams. You've got the direct scams. Meet Kevin this guy is probably, he's the worst. He's absolutely the worst in many regards, without a doubt. But you have more subtle scammers out there that do the clickbait stuff and but they build up their channel. How do they build up their channel? Right? And then you got the whole affiliate link thing, right? That's also a tie-in to the clickbait. Oh, you got the clickbait, okay, I'm going to subscribe. Oh, more people to sell your affiliate links to. And I mentioned this before. I mentioned this several years ago, probably 3 years ago. I said, listen, and I mentioned it recently on YouTube. I said, look, all these people selling affiliate links, they're posting affiliate links for Webull and Public.com and Robinhood. They're your enemy. These companies are scams. They're selling order flow. They're ripping you off. I mean, folks, you people out there are ones empowering these scammers. Is it, is it a lot of it through ignorance? Yeah, you don't know. But, once I deliver this message, you all should know. These companies are selling order flow. I addressed the order flow issue many, many, many years ago before anybody knew about it. In fact, I made a video calling out Michael Lewis, who's a pinhead, doesn't know what the hell's going on. He's a tool for the establishment, basically. This guy with the stupid high-frequency trading nonsense, I made this video probably in 2013 or 14. He's distracting people. Folks, why do you think I was banned? By all media. They don't want people to know what's really going on. They want their guys to set the real narrative. Because if people really knew what was going on, there'd be a resurgence of Occupy Wall Street. So Michael Lewis distracts everybody with high-frequency trading, which is complete rubbish. It's complete nonsense, right? Meanwhile, he doesn't talk about the fact that people that get Reuters news feeds, which are people who work in the financial industry, they get those news feeds 5 to 10 minutes before everybody on the street. They get, basically, to some degree, insider information. Because those news feeds can be a huge source of short-term trading. Imagine if you're getting an earnings release or some type of announcement, material, event, 5 minutes, 10 minutes before everybody else. How Michael Lewis knows this. Why doesn't he talk about it? That's a problem. Because who do you think supports Michael Lewis? The media. He's part of the media. Thomson Reuters is the media. You understand? Another example is the selling of order flow. I noticed that going on about 2010, personally, from looking at my brokerage accounts. I noticed the time and sales was screwed up. Now, not many people would notice that unless they're seasoned professionals in the industry, because you have to kind of know how, I knew the orders weren't being executed in a timely manner. And that was in the early stages before it was a huge industry. So I looked into it and I realized, I was like, oh shit, Citadel bought 80%, I think it was 80%, they bought a majority stake in E-Trade back after the financial crisis. Because E-Trade was going to go bankrupt. They got themselves knee-deep into subprimes. I don't know if you guys know that. Then I looked into it more, and they actually at some point were executing, I think, 80% of the trades of E-Trade customers. That's why they invested in E-Trade, so they could get their order flow. See, so Citadel began all this garbage. So my point is that, meanwhile, Michael Lewis writes some stupid book and distracts everybody with high-frequency trading. What do you do? Look, if you've got a T1 connection, a T1 line, more power to you. You've got a faster line, okay? That's selling order flow is completely different, okay? It's completely different. And it's also different when you have, now the whole industry selling order flow, which I've already contacted the SEC 2 years ago and told them if they don't watch it, the selling of order flow is jeopardizing the liquidity of the markets big time. Because now, if you're prudent, you can't put in market orders a lot of times because the spreads are too large, right? You all notice that? I mean, if you haven't been investing for a long time, you're not going to notice that because that phenomenon has, it's been around for maybe 2 or 3 years now. Prior to that, you didn't have large spreads. You all understand that, right? Well, so listen, so let me explain the order flow situation, okay? First and foremost, I can't speak for brokerage firms per se, and I'll tell you why in a second, but I will tell you this without a doubt. Fact, write it down. I'm as sure as this that Tom Nash was never a Wall Street analyst, and that he's completely incompetent. And that is, these trading apps are selling order flow, all of the order flow, without a doubt. In fact, I'm willing to go on a limb and suggest, actually, I would bet that they're actually more devious about it. In other words, they're getting higher prices to sell their order flow from companies like Citadel and some of these other hedge fund market makers now. And the reason why is because, first of all, the kids that use Robinhood aren't going to know the difference. Second of all, understand these trading apps, they only have one source of revenue, right? What's their source of revenue? If these trading apps, Robinhood, Webull, so on and so forth, I mean, they're executing trades for free, so where are they making their money? It's kind of like the whole email scam. It's kind of like Facebook scam, right? There's nothing free, folks. You're better off paying for something up front because you have a relationship with that provider, and that provider values you as a customer. If you get something for free, you can bet you're the product. The provider giving you something for free, selling your shit to screw you behind your back. Okay, it's common sense. There is no free. But, this young generation, they think, sharing economy free? Oh, really? Sharing economy? If it's sharing economy, how come people are charging for it? Sharing means there's no money exchange. You see how they manipulate these things with these ridiculous terms? The sharing economy, going to share. Oh, right share? Okay, so it's free, right? No. So the point I'm trying to get at is that when you look at firms like Fidelity and Schwab, and I'm not going to mention E-Trade. E-Trade's a scam company. Tell them I said it. They screwed me on. I have stories about E-Trade. I actually did some videos on it. But so if you look at Schwab and Fidelity, for instance, they have many different sources of revenue, right? Fidelity does a lot of 401ks, a lot of mutual funds. They have a lot of individual accounts. They deal with a lot of financial advisors who use their portal there for custodian. They pay for custodial fees. Schwab as well, right? Schwab is huge in the custodial business. So they don't need to have those commissions. In fact, Schwab led the charge. Schwab began the reduction of the commissions, if you all recall, a few years ago, right? And they're the first major brokers to go down to zero because they saw what was coming down the pipe. So my point is that, does Schwab sell order flow? Does Fidelity sell order flow? Yeah, I'm sure they do. Do they sell 100%? Probably not. There's less of an incentive for those companies to risk, screwing you over because they have other sources of income. But these trading apps don't have any other sources of income. Of course, they're screwing you. And I believe that the trading apps are getting paid more than other firms that are selling order flow because their execution is screwed up, is really screwed up. Because look at the demographics of people that are using Robinhood and Webull. It's not, just generally speaking, in general, if you look at average account sizes and average experience and age, obviously it's going to be a lot less. So obviously you're dealing with a more naive pool of investors, you see. So honestly, it's better if they bring commissions back. I know, I don't want to pay for commissions, but it does a lot of things. First of all, it brings the accountability back to the principal provider. You're dealing with your broker to execute those trades. Second thing is, it actually alters human behavior. You're not going to trade as much. People are going to consume things much more often when they're free. That's just a fact, right? So you're going to be trading a lot more. Oh, it's free, it's free. Yeah, well, if you look at actually studies out there, pretty consistently, it's known that, in fact, females actually do better in investing, generally speaking, over males when you're talking about active investing, because the tendency is of males to overtrade. They're trading too much. Okay. listen, Razvan, the dollar is fine. Don't believe any of that garbage. I was debunking all that crap from the gold pumpers 12 years ago. Okay, I'm the leading source in the world of debunking the propaganda, the gold pumping propaganda. I'm the only person in the world that explained why hyperinflation is impossible in America. It goes on. The list goes on. I've written countless volumes and articles and videos. I've done all that stuff. The dollar is fine. Okay. In fact, Americans are spoiled because we're the only country really that it doesn't really matter so much what the dollar does. Other countries out there, Australia is a good example. People often try and they try and hedge with their currency moves. So they'll buy some certain things that typically hold their value, or they'll anticipate a move in the currency. Right? The U.S. makes everything that they need for the most part. So you say, well, how come they export or they import stuff? It's because that's corporate America. They want to get the cheapest stuff. But America basically can make everything that it needs. Okay, that's just a fact. Not only that, the dollar is tied to all commodities. Okay, so it doesn't matter. The only impact of a falling dollar is really, if it's long term, then you're dealing with macroeconomic issues of the U.S. government. But typical consumers is not really going to impact you. And aside from all of that, listen, if the dollar has a problem, the rest of the world has a devastating problem. I can assure you. Okay. Yeah, buy the dip. Yeah, well, Palantir. The problem is that everyone, apparently, I don't know. Can somebody give me the history of where this buying the dip came from? I mean, because I think by now, already everyone that's been buying the dip, they're already tapped out on money, right? That's another thing. By the way, let me just mention that the importance of forecasting the market. That's what I do. That's maybe my top expertise. Can you understand the importance of forecasting the market? We're not just talking about looking at charts. We're talking about looking at the macroeconomic landscape, including interest rates, inflation, that impact on valuations. Can you understand now the importance of that? Irrespective of what some stock is supposedly valued at, it doesn't matter, because when the whole landscape changes, all the valuations they reset. And this is, by the way, this is what's going on right now. Is investors are still trying to figure out what some of these stocks are worth. I can assure you. And this is going to continue to go on for a while. We just got started. I can assure you on these things. It's going to get a lot more painful. So, in fact, I was surprised that the market was holding up so well for so long, to be honest with you. Look, you're going to get rallies. And some people are going to get stuck in. And let me just get back to what Mr. Dan C. said earlier about buying an index fund. Folks, I'm just telling you right now, that's what you need to do. The best thing you can do for yourself and for your financial future and for your entire life, I'm going to say with rare exception. The problem when you say exception, everyone thinks that they're the exception, right? But most of you, almost all of you, listen, stop wasting your lives consuming financial media. It's consuming your life. And it's causing you stress, drama, this and that. You're going to be better off just buying an index, buy the S&P index, okay? And just invest in it, just add money to it periodically or regularly, whatever. And avoid all media. Avoid everything. Don't even think about it. Because if you're doing the other thing, and that is thinking that you're going to get some advantage, you're going to do this and that, it's going to cause you stress, it's going to consume your life, things you could have done more productive doing in your life, and you're going to make less money. Okay? The only other exception would be if you're truly committed. Time, effort, money, patience, and you have somebody that you can learn from. All of those things are very difficult. Okay? I can assure you. And I don't know anybody you can learn from other than me. I don't know, because people know what I know. Okay? They're not wasting time with you guys. They're managing funds. They don't give a shit. Okay? And let me just mention, by the way, about these fund managers. I would say, there's always exceptions, okay? There's always exceptions. There's never 100%, or rarely anyway. But I'm going to say just about all large hedge fund managers, and I can't speak for other countries, I'm going to speak for the U.S., just about all large hedge fund managers, with some exceptions, are involved in insider trading. And that's a fact. Now, let me just kind of give some of you, maybe you haven't heard this before, I advise multi-billion-dollar funds. And I've been doing that for a long time. Multi-billion-dollar hedge funds, mutual funds, endowment plans. In fact, I've even provided research and advice for fund managers for their own accounts. Okay? I know the landscape. I know the industry. And I can tell you, they're all involved in just about insider trading. Okay? The smaller funds typically aren't. And the reason why is because they're small. They're the small fish. They don't have the connection. They don't have the money. And if you doubt me on that, why don't you look into Steve Cohen? Take a look into Steve Cohen. This guy was involved in insider trading for the better part of 20 years. Didn't even go to jail. Right? And he blamed on some Indian guys. Seems like these guys, they make some Indian guys take the fall. Because it happened a couple other times as well. And they blame them. And they pay a fine. And they continue. The exception, the main exception to that is when you got these guys that go on TV and pitch their stocks. Like, what's that weasel-looking guy? I forgot his name. What's the weasel-looking hedge fund guy? But anyway, I can't think of his name. But guys like Bill Ackman, for instance, right? Let me tell you guys, you have to understand, real hedge funds don't want you to know what their positions are. Did you know that? They don't want anyone to know what they own. So when you have guys going on TV and pitching all these stocks, what they're trying to do is they're trying to get the cheap men on their positions. They're trying to get you guys to buy into their positions if they're long, or to short their positions if they're short. You see? They're just trying to manipulate the market. Right? That's the reality. I mean, the whole hedge fund industry is, the industry's a scam. It's a huge scam. I'm not going to get into it. The hedge fund industry is a huge scam. People don't even realize. Most people who have pensions are involved. They're invested in hedge funds. And they don't even know it. People think that hedge funds typically are investments for rich people. That's not true. That was 30 years ago, 40 years ago. What's happened now over the past 20 years is that most of these hedge funds, especially the big ones, they're managing money like pensions. And when you understand that the whole benchmarking methodology of the hedge fund industry is largely a scam, then it becomes a very criminal situation when you're talking about the pensions of working class people who are being defrauded. Anyway, Ray Dalio is, in my opinion, a con artist and a moron. He's a pea brain. And this guy, listen, I know the hedge fund business, and I mentioned this before. There's two guys that have been in the media a whole lot recently, past few years, who I've never heard of. Okay, you know who they are? Jeffrey Epstein and Ray Dalio. Okay, I never heard of these guys before. And Jeffrey Epstein, hedge fund? He doesn't run no hedge fund. I knew that was a joke. Ray Dalio is trying to do something. He's trying to run for office or something. He's got this big PR campaign. He's trying to reach out and become like a populist and all this part. Ray Dalio doesn't even run a hedge fund. That's not even a hedge fund. That's a mutual fund. Okay. I mentioned this before. Anybody can call any fund that they have a hedge fund if it's legally structured as a hedge fund. Hedge fund can mean anything, by the way. You all know that? It can mean anything. It's just a legal structure, okay? But effectively what happens when hedge funds are really large, they're mutual funds. Take a look at Ray Dalio's top holdings. Consistently, he has the S&P 500 there. Take a look. If you don't believe me. Go look at the old data, okay? I'm telling you, I know this. So what he's doing is basically collecting management fees, okay? And his performance ain't so good, I can tell you that. When I talk about Warren Buffett being the most overrated investor, probably in U.S. history, which is true in my opinion, my God, compare Warren Buffett to Ray Dalio, then yeah, Warren Buffett is certainly, you're talking completely different spheres as far as I'm concerned. Warren Buffett's legitimate. I don't think Ray Dalio's. To be honest with you, there's no factual basis behind this. But when I look at Ray Dalio, I kind of see like, I don't want to say it because I don't want to make it sound like that's the case, but I kind of get this feeling like he's kind of like a Bernie Madoff type of guy. He seems like really shady and not that knowledgeable. But of course, with all these hedge fund guys, they try and come out as really intelligent. And they talk mention all these words because it's all a marketing game. They're trying to raise money, you see. But Ray Dalio just seems like, there's no other major hedge fund manager that I know of that I've had this thought. It just seems like he's kind of I don't know, it seems like he's kind of a dildo. Doesn't really, Bill Ackman, I wouldn't say it about Bill Ackman. I think Bill Ackman's a sharp investor. But folks, I'm telling you, he ain't no better than most experienced investors. The media makes you think all these guys are superstars. But once you uncover the veil, get behind the curtain and see the reality, you're going to realize they're not any different. The media wants you to think that all these guys are great because every time they have a story, an interview, it's clicks, right? Ad clicks, ad revenue. Okay? Just take a look at Warren Buffett's performance over the past 16, 17 years. He hasn't even beat the S&P 500. Think about that. And the S&P 500 is not even a credible benchmark for Berkshire Hathaway. Berkshire Hathaway is a hedge fund or a private equity fund. Really, it's not structured that way, probably. But should the index even be, should the benchmark be the S&P 500? When he's able to purchase private companies, he's able to use leverage, he's able to get all these private deals, you understand? So, not to mention the fact that he manages he's a value investor, right? Berkshire Hathaway is considered at least a value fund, maybe a growth and income fund, right? It's more value oriented. I'm not going to talk about his style drift. We can talk about that here in a second. How he's all in tech now. And this is a man who's always talked about how he never understood technology. And that's a whole other. But my point is that when you have a value fund, Berkshire Hathaway and Warren Buffett, we're talking about value investing, correct? Everybody correct? Same page, right? Everybody on the same page, right? Agree? Yes, no? I'll get to Kramer in a second. Let's not expose Kramer a long time ago. This guy's a disaster. He's a liar and a scam artist. Jim Kramer is, by the way. If you're a value investor and you have a value fund, you need to pay dividends, don't you? Of course you do. Take a look at Buffett's top holdings and take a look at the dividends he's getting. Why isn't he paying dividends in his fund? So the Warren Buffett lackey is going to say, oh well, we want Warren Buffett to reinvest those dividends for us. That's going to give us a larger compounded return, right? That's what they're going to say. But I say to that person this: I say, well, why don't you give investors the choice on whether to reinvest the dividends they should be receiving from Berkshire Hathaway, right, or to receive the dividends, right? See, that's also, by the way, when you look at the S&P performance versus Berkshire Hathaway, even if you want to use the S&P as a benchmark, which is not an accurate benchmark for Berkshire Hathaway, because Berkshire takes more risk, uses more leverage. But if you do want to use the benchmark, understand that you need to make sure and take a look at what the S&P returns were over the period that you're examining, with the dividends reinvested in the S&P. Okay, people don't do that usually, do they? S&P is yielding probably 2% for several years, right? That's got to be reinvested into that index, right? You understand what I'm saying? I'm telling you, folks, there's so many scams in the financial industry that people don't even know about, and it's right under their nose. But people just they're not aware, they're not observant, they don't question. See? They're too accepting of things. But I don't care what you do in your life, you better be, you better think about things and question things. So I've never heard of factor investing. Jim Kramer, let me just tell you, as I mentioned before, just about everybody from the financial industry who's in the financial media is either a loser, they failed, or they're a scammer. You can write that down. Write it down. You see, folks, I don't say things without having the facts. I don't do that. Remember, my background is very analytical, science-based background, right? When you go through a program of study centered around the scientific method, which is critical thinking, right? You don't just come out and toss things out of your mouth. You don't do that. I have a basis for my conclusion on that. What's my basis? Well, I've previously exposed many of these people on CNBC. Jim Cramer, for instance, he makes false claims about how he had such and such return on his hedge fund, which is, he's never shown proof of that. And if you're making so much money doing well in hedge fund, why are you in the media, right? Jim Cramer realized he could make more money manipulating stocks in the media. And I'm not going to get into that. I can tell you what you might want to read about that, though. It's pretty informative. Is what's his name? What's the former Overstock.com CEO? What's his name? Patrick Byrne. Go on Patrick Byrne's website, type in deep capture, 2 words, type in Jim Cramer, and he has this big long article he wrote several years ago talking about this whole mafia on Wall Street and the manipulation and all the scams. It's really interesting to see how deep he dove to look at all the connections with Jim Cramer and some of these other guys. But you look at Josh Brown. I mentioned this before. Josh Brown, the reformed broker. That means doesn't that mean like you were doing something wrong before? Like, tell us what you were doing wrong. Well, guess what? You all know Josh Brown, right? Everybody? You all know Josh Brown, right? Josh Brown, the clown. Everybody know who Josh Brown is? And this is why I expose, by the way, because if you look at what's going on in the financial media and Wall Street, you have a particular cabal of people who are involved. And if you're not in that cabal, you're not invited. You're not welcome. And that's the big problem on Wall Street within the financial media. Okay, I exposed all this crap on my site a long time ago. Let me just say something. The number one thing, honestly, the single most important step I think to become a good investor, and probably the easiest thing to accomplish, is to understand that all financial media is bogus. It's bullshit. When I talk about financial media, I'm obviously talking about YouTube. If I say CNBC is bullshit, That means the garbage on YouTube is a million times bullshit. Okay, I'm just telling you right now. The problem is that most of you don't know that. You're not aware of that because you don't know enough. I'm telling you, based upon my experience. That's why I say, look, most of you just invest in an index fund and like recapture your life. Like, like don't pay attention to any of this stuff. Just imagine how much time you're spending on the stock market, watching videos and watching TV and trying to do research and doing this and that. Imagine what you could be doing. You probably have another life in terms of time available that you could spend doing something. Because you're not going to do better. You're not going to outperform the S&P, most likely, long term. Is it possible? Yeah. And there's other advantages for managing your own money, without a doubt. It's not just about performance. There's other advantages. But you know what's funny? I've never heard a single person on YouTube, all these gurus, they don't even talk about suitability. What's suitable for me may not be suitable for you. Just because I'm investing in something doesn't mean you should do it, right? Of course, they don't understand that because they never worked on Wall Street. So they don't understand suitability. Suitability is something you got to know. You got to understand. And that's key. You got to understand your suitability. It's very important, okay? So that you're not making investment decisions that you shouldn't. I'll give you a great example. This person who wrote this email today to me and told me this terrible story how they lost their whole savings on Palantir and they listened to Tom Nash. And, and I'm thinking to myself, and this is not just him, this is all these people. Like, if you just had a financial advisor that you went through, the financial advisor would have told you, hey, what are you doing? You're over-concentrated. This company is new. It's very speculative. Or the same thing with people investing in Kathy Wood's ARK Invest, which it's funny because this friend of mine, I remember I met him on the beach. God, when was it? I met him on the beach, I don't know, a year ago. And he's one of these, he's a millennial guy. He thinks he knows, oh yeah, investing, I can trade and this and that. And, he doesn't know my background. It's like, listen, he's talking about all this stuff, for instance, and talking about smartphone and this and that. And I'm telling him, yeah, he didn't even know like Qualcomm's position in that market. But he doesn't realize how ignorant he was. He told me, oh yeah, you should listen to this lady. Her name is Kathy Wood. You're going to really like what she has to say. And I said, listen, man, this lady's full of shit. Her fund's going to blow up. Okay? My point is this. Imagine all these people who get sucked in. And of course, you've got most of the YouTube people. They're just pitching Kathy Wood's garbage. They rode her coattails. Right? But you got most of these people who whether it's through Kathy Wood directly. I mean, you can go on one of her. I'm going to post it. Actually, I've got the comment. I actually went on one of her videos about 3 months ago and I said, look, no, there's no deflation, there's inflation, this and this. Valuations are going to come down, this and this. And I said, look, a few months ago, when your fund was 110, I came out publicly and said it's going to hit 50. If you don't change what you're doing, it's going to go well below 50. You can see it now. I wouldn't be surprised if it hit below 30 eventually. Wouldn't be surprised at all. But my point is that whether you fell for her nonsense or someone else pumping her, the point is, imagine if you had gotten a financial advisor. You were working with a financial advisor. They wouldn't have allowed you to get into that dog shit, or at least much less. I guarantee you. Why? Because when you're really dealing with, and by the way, I don't like the financial industry. I'm pretty negative on the whole financial advisory situation. But that doesn't mean that they don't provide value, okay? There is value there. And there's value in most things, right? The question is, what's the percentage of value versus toxicity, right? So in this case, a financial advisor, at least working with one, would have helped you. And you have people that they don't want to do it. They want to save money. And they want to buy direct. And you see the result of that now. Same thing with people thinking they can get great investment advice on YouTube for free. It doesn't happen, folks. It just doesn't happen. And the problem is that at some point, you're either going to listen to someone like me, who's got a lot of experience and a lot of credibility and a lot of insight, and who's not here for himself. You're going to just trust me when I say, stay away from this stuff, or you're going to learn the hard way. And I saw people learn the hard way already back in the .com. I mean, there's a lot of similarities between this period and the .com bubble. I mentioned that actually a year ago. There's a lot of similarities, without a doubt. Probably the only major difference is that the .com, what caused ultimately the collapse of the .com was an avalanche of accounting fraud. And that, of course, led to the passage of Sarbanes-Oxley. And there's been a lot of changes since that time. But, there's always going to be something else in the future, right? But, back in the .com bubble, you had the poster children of that. Mary Meeker, Henry Blage, all these people pumping these stocks, right? I actually showed Payne Weber, which is UBS now, the thematic report. You can actually find it online for free. It's called The New Millennium Investor. I think it was written in 98. Ed Kirshner, he was a superstar investment strategist at the time. And, they had these themes, And to his credit, his stuff was actually pretty good. It wasn't extreme. It wasn't like pumping all these internet stocks per se. It was pretty well rounded. But think about like this whole, and some of you probably don't get this, but you're thinking like disruptive technology, disruptive innovation, right? Wow, sounds good, folks. I'm telling you, I had never heard of most of these stocks that Kathy Wood owns until like I saw these YouTube people or I looked at their stocks. And if I'm not following these stocks, it probably means it's probably a good chance that they're dog shit. Like, why don't I know about these stocks? You see what I'm saying? I'm not saying every stock, I'm sure I'll miss some, but just generally speaking, like why would they pass through me and I don't know about it? It tells me that people are going, it tells me about where they're going for their information, you see? Where they're going for their information. And they're obviously going to the wrong places. It's funny, I did there's a portal I do, it's called the Securities Analysis and Trading Webinar. And we just kind of go over stuff and analyzing stuff, and maybe when there's periods, the main focus is that distress securities analysis, which I think I'm exceptional on. I know I'm exceptional in distress securities analysis. It's one of the most difficult things in the world to do. But my point is that people were coming to me, and they've been coming to me for a while now, actually since last year, talking about, what do you think of Teldocs? What do you think of Peloton? What do you think of Zoom? What do you think of all this Kathy Wood garbage? And it's funny because about 2 weeks ago, once again, somebody brings up Teldocs. And I had to tell them the story. I said, listen, folks, some of you know this, but maybe some of you don't know this, okay? And Teldocs, of course, is more of a digital healthcare, telemedicine type of thing. I said, look, I was working in venture capital, healthcare, information technology, and telemedicine 17 years ago, okay? I was directly involved in that technology before most people even had a clue what it was. I actually wrote half of the healthcare book that I wrote was on telemedicine. 13 years ago. I'm an expert in healthcare. And I know, probably not an expert on telemedicine now because I haven't done it for many years, but I can argue that I am. And I said, if I'm telling you there's no, teledocs, well, it's garbage. What do you, it's funny because I've been talking about that for a long time. And it just so happened that I think 3 or 4 days later, it's when it collapsed, 50%. So my point is, you got to understand, folks, ask yourself the question, how is a person qualified to be coming out on a global platform and giving you stock information, stock advice? How is a person qualified? People don't ask that question anymore. How are you qualified? What makes you qualified? Tell us your credentials. Nobody asks that question. It's very simple. It's very basic. If you ask that question, then you can begin to kind of filter through who and who not to listen to. You see? Now, of course, this is where the financial media, like CNBC, where they come into play. They tell you all these guys that make up all this garbage and nonsense, and they distort track records and cherry pick things. Because the guys on there are a bunch of clowns. All these guys. Jim Rogers is a complete clown. I mean, all these guys. I've exposed all these people many years ago. And so I'm just saying that on YouTube, well, it's a very simple thing, right? Ask people how are they qualified. Show me how you're qualified, right? Show me how you're qualified. Yes, Mr. How do you say your name? Or Mrs. Francis Coin? That's correct. The problem is that some of you millennials, Z generation, Y generation, you all seem to think that validation means a lot of subscribers. Validation means a lot of likes. No, it doesn't. Let me kind of give you some bad news, folks. Most people in the world are stupid. Most people of the world are not too smart. The masses in general are not smart. They're not. The masses in general throughout the world are not smart. That's what I have learned in my life. Okay, and when you're talking about something like investments per se, people are much lower on the food chain because investments is a very complicated thing. Okay, so this is why you see people that have the large followings, not all the time, but typically it's a bunch of sheep. You see, because the appeal is to the not so intelligent person. Okay, it's not about appealing to intelligent people; it's about drawing in people. This goes back to what I was saying earlier. Some of you may have not been here, and that is when I was talking about how Mr. Max Mayer and Meet Kevin, these two guys back in 2020 were making daily videos talking about stimulus money and how the government's going to release more money for you people. They were targeting people that of a certain demographic. That typically, I'm not going to say everybody, but just generally speaking, you're talking about people that are not as fortunate, not as educated, and or more desperate for money, regardless of their situation, right? So these people, they're subscribing to these channels like Meet Kevin. They're sheep. They obviously have no idea. And the sad thing is that they actually think they know what's going on because they understand what Kevin says, and they're going to learn the hard way. They're going to learn the hard way. Tom Nash is a sheep. Have already learned the hard way, right? If you think Palantir can't go lower, it can go 50% from here. Oh yeah, it can. I'm not saying it's going to. It can. Okay. The question is, it doesn't even matter. The question is, where are these companies going to be in 5 years, in 10 years? And let me just give you a lecture. I don't even need to look at the charts. Okay. Remember, I'm a professional analyst. I'm a generalist analyst as well. I cover many sectors. I do a lot of things. I'm a strategist. I do a lot of stuff. So I know a lot of things, and I've spent many years doing this professionally, full time. Go back and take a look at some long-term charts of some of the mega leaders, some of the giants in tech. Take a look at where they were in 2000. How many years did it take Microsoft, right, to surpass the highs it made in 2000? I don't think it did it until like 2015 or something, 2014, right? Maybe Qualcomm. I don't even know if it's surpassed the highs that it made. You can take a look and see for yourself. Take a look at these 25-year charts if you want some perspective in things. Okay. Perspective is very, very important in everything in life. Oh my God, you bought this Jeremy fund. Look, listen. It's easy for me to criticize people and say, you're a dummy for doing that. But I don't want to do that. I don't think it's fair. And if I ever do that, I want someone to stop me and correct me because I don't mean that. Because I understand where you are. Remember, I'm a guy that began this whole investment industry not knowing anything. So I can see where people are getting duped. Okay? But the point is that you got to wake up at some point. You see, when I got into this business many, many years ago, before many of you were born, can I tell you, I didn't even know what an interest rate was, the relevance of it. I knew nothing. Nothing. I had to learn everything on my own. Okay? Everything. And I know a little bit about a lot of things. Which is funny, by the way. Let me just mention. Actually, I remember I actually ran across a live stream of Meet Kevin during the Teldocs collapse. This is a guy who, by the way, wants to tell you that his courses, apparently, he says his courses are more valuable and you can learn more than you can at Harvard and Yale. And I don't know if you mentioned my alma mater, University of Pennsylvania. But this is why this guy's a scam artist. But the point is that so Kevin's got an undergrad degree in finance, right? Yet he goes through Teldocs, he doesn't understand why it collapsed. He reads the press. I saw him sitting there reading everything in the earnings and the press release and so forth. I don't even think he understands what goodwill is. It collapsed because of the goodwill collapsed. It's very simple. The company acquired some dog shit that was overvalued, which is reflected in goodwill. And in fact, if you take a look at the accounting, the books, most of their assets are intangible, I believe. Don't quote me on that. I think so. I mean, like people are recommending this dog shit, like they don't even take a look at basic stuff. Always, folks, let me tell you, always. I always try to look, especially if I suspect that they have done acquisition, always look at goodwill. Okay? Always look at goodwill. In fact, goodwill is why Warren Buffett, the genius in 3G Capital, the Brazilian baboons, the guys who controlled Heinz Kraft and caused it to collapse, they had to write off, what was it, $20 billion in goodwill? I wrote an article when that merger was done, but he overpaid. Instantly I knew it. That's why Kraft collapsed, because they had to write down, right, the overvaluation of the goodwill. You see, that's why Teldocs collapsed as much as it did. And I knew that instantly. It was obvious. So you got a guy, of course, Kevin, he's a fraud, he's a con man. There's no simple way to say it other than that. And let me just tell you one more thing, by the way. When you're reaching a large number of people, your responsibility and accountability increases proportionately. You understand? And I think I'm willing to bet. Another thing is that people watch Kevin because he goes out and he brags about having this money and this. Do people believe that? He's lying. He's lying through his teeth. He's a liar. Of course, me, Kevin, Tom Nash, they banned me from the channel. I mean, these guys would never. I mean, you have to understand that I've been calling out professional guys, like guys on Wall Street, for many years, who fear me. They would never, because they see, when you're running a scam, when you're deceiving people on things, like, for instance, guys that are pumping up this narrative of gold and stuff with all their nonsense or nonsensical myths, the worst thing that can happen is for you to be exposed, for your myths to be exposed, because you're cultivating cults. These guys have cults that believe their nonsense, you see. Mr. Yelton, Tom Nash is not his real name. Of course it's not. He's hiding. And it's funny, well, I don't want to be doxxed. Well, Tom, why would anybody dox you? Like, why are you afraid? Like, what? See, he's hiding his name because he doesn't want people to check his background. And if you notice now, Tom, every video he has his University of Michigan shirt on, don't you think it's a little obvious he's trying to, like, make you think he went? I don't think he went there. I don't think he went. Even if he went there, Tom, so what? I went to an Ivy League school. Do I sit there and tell people about it every day? Folks, you gotta learn how to spot content. Some of the telltale signs when people are throwing out insignificant things to try and make you think that they're an expert. Like, oh, well, I went to the school. Right? Oh, I have this money. Okay, show me your fucking track record. Okay? That's all that matters. You understand what I'm saying? Tom Nash is complete. Why do you think I offered 10 grand? It's not even a bet. It's not even a bet, a wager. All he has to do is show me the evidence. Tom Nash is an internet marketer. I've shown that, and I can't take the credit. Someone else exposed that on Reddit, as I showed the video a couple of years ago. Tom Nash also previously claimed he had an MBA and a law degree. Notice he doesn't claim that anymore, by the way. Right? He's constantly, and the problem is you've got nobody else. How come no one's calling Tom Nash out? How come nobody's calling anyone out? You only have people calling out maybe me, Kevin, because these are the same people who want to climb the ladder, the clickbait ladder, and they want us to make money. Right? Right? So, I mean, think about it. You've got me, a world authority. So, I mean, it seems like people should be bending over backwards to interview me on their channel. Say what I have to say. But folks, it doesn't work that way. Everybody on YouTube is playing the same game. They're all playing the same game. I'm telling you. I said this a long time ago. I said this from the first videos. They're playing, it's a circle jerk. They're pretending. They're all playing the same game. Nobody gives a shit. They all care about number one. Okay? And that's unfortunate. Yeah, CoffeeZilla. Exactly, CoffeeZilla. And by the way, I remember seeing, and Patrick Boyle's another one. Patrick Boyle doesn't know his head from his ass in terms of the capital markets. He doesn't have a clue what's going on. That's why he comes out with these videos like 2 weeks after they talk about on CNBC, explaining stupid things that don't have any, like, hey, Patrick, you're telling everybody you're a hedge fund manager. Tell me how I can make some money, right? You notice he doesn't have a clue. It's funny because I remember seeing that video, and I knew Patrick Boyle was full of shit. And I knew he wasn't running a hedge fund. Now on his Patreon, he finally corrected it, because I went on his comment on his video many times. He blocked me. He told me, you're not a hedge fund manager. Folks, hedge fund managers are some of the most highly compensated individuals in the world. Patrick Boyle's a hedge fund manager, yet he's on YouTube e-begging? I mean, come on! I mean, let me give it a break. Hedge fund managers aren't on YouTube. They don't have channels. So, look, if the guy's a clown, he's a clown. Patrick Boyle, in terms of investing, doesn't have a clue. You can tell him I said it. I'll go any day against the guy. He doesn't know what he's talking about. In fact, his hedge fund, it didn't have anything to do with the stock market. He was trading commodities, quant-based commodities trading, which is just kind of like impulse garbage, like nothing, like based on technical signals. That means he probably doesn't know a whole lot about the important things pertaining to the market. And the reason why I knew instantly he was full of shit was because he never came out and smashed these trading gurus on this CoffeeZilla show. He's kind of like, oh yeah, I mean, can you imagine what I would say? Right? He never came out and smashed it. Why? Because he was doing it. He was doing the same thing, trying to trade short-term trade the commodities market, and apparently his fund blew up. Either that or he got a lot of redemptions because he was losing money. That's what happened. Okay? So, I mean, I wouldn't say he's like the other guys, but there's a little bit of dishonesty there because he told people for the longest time to go to the channel, I'm a hedge fund manager. No, you're not. You're a former hedge fund manager. Okay? There's a difference. I don't like that. That's deceptive. And this CoffeeZilla, of course, this clown, he doesn't have the expertise. How does he know? He doesn't know anything. What does he know? He's out of his league. Okay? All he does is expose obvious scams. He doesn't have the expertise to know that Patrick Boyle's full of shit. And by the way, CoffeeZilla also apparently promoted Tom Nash. Folks, I told you, they're all in the circle jerk. They're all holding hands. They're all working together. Okay? They're working against you. You are the prey. You are the enemy. They smile at you and tell you that, oh, good to see you. They want to help you. At the end of the day, they want your money. They want money from you. Directly or indirectly through ad clicks, through affiliate links. They don't. This is why I'm so upset. It's a very toxic, disgusting situation on YouTube. Truly. Okay? And, I don't have to say anything about it, but let me just tell you something. When I worked on Wall Street, and I worked as a financial advisor, I got pissed off at things that I saw in the industry. Because it wasn't as I thought it was. It wasn't as I thought it should be, or supposed to be. So ever since that time, I've been kind of an investor advocate. And I became more so of an investor advocate when I tried, I actually sacrificed, most people don't know this, a lot of people don't know this, I actually sacrificed what I was doing for no pay to try and warn everyone about the financial crisis. I'm not just talking about going out on the microphone and blabber. I took out 2 years of my life to write a PhD thesis-like presentation. Okay? And I was banned by all media. So, you guys don't even know my story. You all don't even know. Okay? And, I probably won't even be around on YouTube in a few months at all ever. So hopefully you guys, I'm just telling you, honestly, the people that lose all their money are the ones that are greedy and they take all these risks. Okay? And they typically don't have, sometimes they have a lot of money, typically they don't have a lot of money, so they don't really care about risk. It's, I have a chance to make a lot of money. And let me just getting back to Kevin. This guy apparently, and it's funny because I saw some of his videos from his little private meeting thing. I haven't had a chance to look at it. Some of you guys may want to look at it. I couldn't believe, a lot of people actually he actually steered people away from doing the right thing. I remember there was one person who was asking, like, when this firm was at its peak. I can't remember. Was its very peak, like, I don't know, 200 or something like that. I don't know. But I remember it was at its peak. He said, hey, you know, I've been writing a firm up all this time, and I'm thinking about buying a house. Should I do it? And he like mentioned, oh no, you should keep it. So and I think like there were so many people he steered in the opposite direction, and like it's just shocking to me. And this is a guy who encourages people to get on margin. Folks, I'm telling you right now, never, ever, ever use margin, ever. Okay? I tell everybody that the first thing. Does anybody out there even know how margin works? I challenge you to find somebody. There might be somebody on YouTube. Challenge you to find somebody who really understands margin. Okay? They don't even fucking know how it works. Do you understand that margin? It's not just a certain amount of percentage that you're stocking declining. You're unprotected. You're naked under margin. Do you understand that the rules of the game can be changed at any time by the broker that you're using for margin? They can change the rules and screw you immediately. Do you understand that? Oh, listen, Jesper. I'm not surprised at all. I don't have any evidence about that, so I'm not going to speak on things like that when I don't have evidence. If you can show me evidence, that'd be super. I suspect these things are going on because I know that all of these trading apps, they approach all these guys, they email them. But if you're talking about if companies are approaching YouTubers with some type of incentivization, you're talking about major problems. So I don't want to make those allegations, but I wouldn't be surprised at all. Okay. Okay. Well, K. Roby, that'd be great. That'd be great if that happens. We'll just have to wait and see. I'm not gonna go into the details of my forecasting, but I can just tell you I was already prepared early in the year for this whole situation, and I guess as prepared as you can be. No one can ever fully be prepared. But I can tell you there's obviously a lot of uncertainty out there, without a doubt, and but none of this really matters. We're not talking about, look, recessions come and recessions go. Markets have corrections. Markets become bear markets, and then they become bull markets. That's part of the game. That's part of the cycle. That's not what we're talking about. We're talking about misinformation, deception. We're talking about the garbage on YouTube, which unknowingly has caused a lot of people to do a lot of bad things, make a lot of bad decisions. And I'm just saying, listen, and you didn't have this environment several years ago. It's a big problem, and it needs to be addressed, without a doubt. Mr. Coney, do you think people on Wall Street aren't porn drug addicts? Well, I can tell you I've not personally known anybody, but I've heard many stories. I can tell you a story about, you all know Larry Kudlow? You all know Larry Kudlow, right? This guy makes me sick. He's a disgusting loser he's a shill for all the ridiculous, exaggerated American propaganda. King dollar, no, free trade is great. It's great for workers and consumers. It's great for the country. That's Larry Kudlow, piece of trash. I can tell you a story, though. You all know Larry Kudlow, right? Everybody know Larry Kudlow? Larry Kudlow? Anybody? Come on, you all know. He was actually an advisor on the Trump administration. This is a CNBC guy, right? Old guy. He'll croak here in a few years, and I'll be happy. I'll celebrate. He's a scumbag. He's an enemy of investors. He's an enemy of America, as far as I'm concerned. But so Larry Kudlow used to be. So here's the deal with Larry Kudlow. Like a lot of these guys, so Larry Kudlow was connected to the Reagan administration. Okay, I'm not going to get into that, but the Reagan administration started a lot of problems with America. Deregulation, which is always a problem for consumers. I'm not going to get into that. But a lot of these guys, they're living off having some junior role with the Reagan administration. Larry Kudlow was one of those guys. So he has a little role there, and he gets, based upon that, he gets a job at Bear Stearns, and he's the chief economist at Bear Stearns. Okay, this is, I think, I don't know, I guess 90s or so. So he's the chief economist at Bear Stearns, right? So I can't confirm this for sure. I was told this by several employees at Bear Stearns. Okay, I can't confirm it, but you can confirm Larry Kudlow for sure admits that he was addicted to cocaine, had a big coke problem. You can look it up online. Anyway, so I've heard from Bear Stearns employees, it's known that during a meeting, he was supposed to attend it was a roadshow, I think it was. Roadshows on Wall Street are basically marketing events whereby they bring their company that they're helping to market to some institutional investors. It's what they're called roadshow, right? They're trying to pitch something, secondary offerings or an IPO or whatever, right? You all know roadshows, right? Anyway, so during a roadshow event, apparently, like Larry Kudlow, he's the chief economist, he should be showing up, right? He's not there, and he's missing. So they're like, oh shit, we gotta go find him. Apparently, what I was told was that they go into his hotel room and they find him like under the desk, like all kind of like slouched and crawled in like a dying insect or something, all toked out. And he lost his job for Bear Stearns based on that. Once again, I don't know for sure, but I was told this by several employees of Bear Stearns. So, never liked the guy. I see him as very anti-American. He's for the top brass. He's for make the rich guys rich at the expense of the working class. This is Larry Kudlow. His propaganda. And this is CNBC in general, right? This is CNBC in general. It's not good. He's your hero? Which one? Jim Cramer or Larry Kudlow? Well, let me just tell you something, my friend. And actually, I had this little debate with somebody from another country last night. And she's like telling me, I'm a gold digger. And never put money before character and morality. Okay? Never. Because money, you can't take it with you. But when you go, your morality and your character will be your legacy. Okay? That's all I have to say about that. But do you think it's possible tension between the U.S. and Russia and China could bring back manufacturing? H2, it's funny you mentioned that because I actually gave a webinar on Sunday, the forecasting webinar. And I try to stay away from politics, and I try and focus on, the investment side, but sometimes I just can't help it. And so I mentioned, I said, you know what, folks, you see now all the situation, you got the zero COVID policy with China, And by the way, you all know how bad it is in China. It's really screwed up over there. China is, the CCP is flirting with a potential social unrest. I can tell you that right now. It's building. But the point is that you can imagine we've had a supply chain issue all this time, right? It's caused a lot of problems. And it's getting worse now with China's zero COVID policy. They're probably going to lock down Beijing. It seems like, and I know that they've already locked down certain portions of Beijing, but they may be, weaning off the site of Shanghai to prepare for Beijing. I don't know. But anyway, the point is that then you throw in Russia into the mix, right, which is also worse in the supply chain. And then you throw in the national security risk. I wrote about this 17 years ago, about China entering the WTO, the World Trade Organization, and corporate America transferring all these jobs and facilities to China. It's a national security risk. And we're seeing it now. So obviously now people are aware that it's on top of Washington's list as a main priority of the U.S. building China's economy for China to build their military to flex its arms more aggressively geopolitically. So isn't it shocking how by this time you would think corporate America, Tim Cook of Apple, would say, we're pulling our factories from China, right? No. Corporate America, this is the problem in America, folks. Corporate America completely controls Washington. They don't care about anything but profits. They don't care about your jobs. I wrote about this, 16 years ago, 17 years ago. They don't care about anything. You would think that even now, when you go to the FBI's website, the FBI's even done a video warning Americans about Chinese espionage and how they are they're involved in all types of ways to steal intellectual property to boost their military. Okay, you would think that there'd be something out there to cause corporate America to bring the jobs back for our national security. But no, you don't hear anything, do you? Oh no, it's shocking to me. It's disgusting to me. This is the problem, folks. Capitalism is in a crisis. It's in a crisis. It's going too far. This is the problem. When you get to a situation in capitalism where you no longer care about your people of your country, right? You're sending their jobs and their wages. You're sending food off their table to other countries. And of course, the media doesn't even tell people that it's illegal to outsource in most of the world. It's becoming more legal gradually through no choice. But many years ago, it was illegal everywhere but America. Now, of course, Europe has to do it, right? Japan's been doing it, but the developing world is not doing it. It's still illegal in the developing world. Think about it. What country, what leaders of a country would send jobs to another country, right? It's a big problem. Well, so Lenovo, of course, Lenovo purchased IBM's PC unit several years ago. I believe at the time they retained a minority stake. But the point is that, of course, that Lenovo is a pretty solid name now. They got that from IBM. And I'll go ahead and tell you, by the way, you're talking about spying. Understand, and I know this, I'm getting ready to do an extensive webinar on China on May 21st, actually. About 3 to 4 hours, comprehensive, probably the most comprehensive in the world. I've been preparing for quite some time. But so I know this, I'm not just speaking out of the side of my mouth. And I've been studying China off and on for close to 2 decades, by the way. So, but understand that many of China's companies, most of China's companies are involved in the military. They're involved in the military. You all know DJI, right? DJI, the drone company. You all know that? That's from China, right? That's involved in the military. That's a military company. You all know that, right? Listen, CoffeeZilla hasn't exposed anything that wasn't already exposed or obvious. And the video that he showed was exposed about 10 years ago, I think. I got the video. CoffeeZilla is another example. He's part of the game. As far as I'm concerned, he's part of the problem. He should stick to the obvious scammers and leave the investment side to the pros, because he has advocated and supported and promoted Tom Nash, for instance. So when you think of these Chinese companies, I'm not going to say all of them, but a large percentage of them are involved in the Chinese military. Okay, so when you're buying products from China, you're supporting the military. And there's a big problem going on with China. I don't know if you guys know this. You all know about, of course, the man-made islands in the South China Sea. You might have heard about that a few years ago, right? And you may have heard about the China's Belt and Road Initiative. There's a big problem brewing potentially with China and Russia. And I think that China is getting prepared. They're preparing for less trade. I can tell you that. They've been doing that actually for quite some time. Yes, Mr. Svensson, I agree with that. Yeah, I agree completely. You're right. She's a pumper that's just on a higher level. That's all. She's a pumper. In fact, if you look at Kathy Wood, that's exactly what she is. No more, no less. Because if you look at her analyst or research department, which of course I'd exposed in a previous video, they're all unqualified kids. They're like a bunch of kids that don't have any Wall Street experience. None of them. I mean, it's almost like she went to YouTube and got these guys. But when you're a pumper, it's best to recruit an army of pumpers that are ignorant, that don't really know anything, right? Why would you want to recruit an experienced, competent analyst who would say, Kathy, what are you talking about? Well, this is nonsense, right? It's funny. Kathy Wood's supposed to be about innovative, right? Or is it disruptive innovation, right? Disruptive, Kathy, really? So why didn't you buy Moderna early on, like I advised in March of 2020? That's an easy call. Why didn't you buy Moderna, Kathy? Right? Think about it. Kathy Wood is a joke. And I'm just telling you right now, folks, honestly, this guy said it. Kathy Wood is just, same thing as these YouTube pumpers. She's just on a bigger scale. That's all it is. That's all it is. World War III, I wouldn't worry about World War III. I wouldn't worry about it. Listen, if you start to worry about these things, the problem with that is you got all these guys out there who do nothing but obsess over doomsday scenarios. These are the same people who've been talking about Bigfoot for 30 and 40 years and alien invasions and shit like that. Just live your life, man. Deal with stuff that's under your control, and it's more certain, right? You know what I'm saying? And that's what I tell people as well in terms of investments. I say, look, you know what? I don't catch everything, but I stay away from a lot of the uncertainty. I stick to things that I'm more certain about. I leave the uncertainty to everybody else, right? And that's when you do that, you're going to miss some big winners, but you're not going to get blown out. You see? Anyway. But the Kathy Wood story is a great example. It's a great example, a great reason why people sometimes need a financial advisor. I can't tell you how many comments I've read all over the internet. And it's easy to say, oh, that person's an idiot. Oh, you mean you risked your retirement on Kathy Wood's fund? That was stupid. But yeah, it's easy to say that. But ignorance is not knowing, right? It's not being stupid. It's just, you don't know. So how do you know better if you don't know, right? So, and I've told people this for a long time, and people of course don't agree with me. And I said, look, the worst thing probably that's ever happened was, and this was after I wasn't working officially on Wall Street, so I didn't have like an agenda. But I said the worst thing from what I can tell that's ever happened was for online trading, for trading to be so easily accessible to everybody. That's the worst thing for them to ever happen, because they're going to blow themselves up. Okay, they're going to blow themselves up, and the financial media plays a big role in that. I can tell you that 15 years ago, 20 years, let's say 20 years ago, they didn't have all these shows on CNBC, Fast Money, and all these trading shows. They didn't talk about shorting stocks. Now, of course, it's all about trading and shorting stocks. And you know why? Right? You know why? Because most people are using self-directed investment accounts. They're not going through a financial advisor. And what that means is that when you blow yourself up shorting a stock, and let me tell you, I don't short stocks often at all. It's the riskiest thing to do, and you only do it under the most extreme circumstances. Like, for instance, when I wrote about shorting the subprimes and Fannie and Freddie in a book. Nobody else did that in the world. But the reason why they talk about all this stuff now is because most people don't have financial advisors. If you have a financial advisor, do you understand that in most cases they're not going to let you short a stock? They're not going to put the order in for you. Do you know that? Anybody know that? And you know why? Because they're responsible, to some degree, they're responsible for your account. That's where suitability comes in. Okay? If you are going on Fidelity or E-Trade or Schwab or wherever, all you got to do is click a button, short, boom. It's that simple. Okay? It's a very risky thing to do for many reasons. I rarely short a stock when you think about it. It's extremely risky. And people don't understand how risky it is. Just like they don't understand how risky margin is. Okay? You see, I've lived through, I've been in the business. I've worked on Wall Street and seen where people get completely blown out because they were short a biotechnology company, let's say, and then the next day, pre-market, they announce an approval for a drug, and the stock goes to the moon. Okay? So I've seen that over and over again. So, yeah, well, I bet you Kevin's selling puts now. And selling puts, that's also very risky. It can be done prudently, but you have to have the right mindset. But legally speaking, and I'm talking about in terms of securities regulations, selling puts is considered very risky. Okay. So, and if you don't understand risk, and that's another important thing about it, you got to understand risk, right? Nobody talks about risk. Media's not going to tell you about risk. They never mention the word risk. Why? We don't care. The objective is to, and you understand how the media works. CNBC, they got all these girls with cleavage talk about fast money. It's all psychological. I mentioned this before. I wrote an article about it about 10 years ago. How this stuff is done intentionally with the media. They have these girls who are often, fairly attractive, and they make, sometimes they're wearing sexy outfits. They got the cleavage, this and that, and they do this. Why? Because the sexual thoughts, they hit the pleasure center of the brain, which releases dopamine. Okay, and it's the same thing. It's the same chemical reaction, neurotransmitter reaction that occurs when people gamble. It's the same mechanism. This is all intentional. I'm telling you. People don't know this, but it's true. So, and by the way, you've got the same thing kind of going on with some people on YouTube. Kevin is notorious for this, right? Back and forth, panic, and what he's doing is this is a very dangerous thing that he's doing, and he's adversely impacting people who are vulnerable to this type of dynamic that occurs in the neurotransmitter pathway. I'm telling you, folks. If you don't believe me, you should research these things, because the media, CBC is a great example of this. They intentionally do this stuff. And, you can read that article I told you about, Deep Capture, the website Deep Capture. Patrick Byrne, he didn't write it, I don't think his associate did, but he exposed Jim Cramer and his whole cove of buddies and his whole system. Mike Milken, anybody remember Mike Milken? Right? Anybody remember Mike Milken? The junk bond king from the savings and loan crisis. Now, Mike Milken is, Fortune 500 list. They talk about him being a philanthropist. They don't tell people how he defrauded investors. And he was supposed to go to jail for 10 years. Oh, but the SEC, the Department of Justice, let him keep the $500 billion that he robbed from people. But guess what? He didn't even go to jail for 10 years. He served a year and a half in Club Med, or Club Fed, right? Club Fed. You see? This is what I'm talking about. This whole, it's Occupy Wall Street was the closest thing that we came to in this country of really getting serious about the shit that's going on. And it's unfortunate, because that was the only chance that we had. And that was, of course, muzzled. It's just, it's unfortunate. Most people don't really understand what's going on. The media distracts them with all types of nonsense, right? You got all this stuff going on with the cancel culture and the gays and the lesbians and abortion rights and gun control and the Democrats, Republicans, and back and forth stuff. Wait a second. Where's the jobs? Like, why can't I work at General Motors like my dad and his dad before? Why is the factory overseas in China now? Right? Why is my dad's pension been canceled? Because Carl Icahn came in and restructured the company and ditched the pensions. You understand what I'm saying? This is typical behavior on Wall Street. This is what's been going on in this country, folks. So, anyway. All I can say, there's going to be some good bargains in the market down the road. Just be patient. You might want to walk away for a while. Quite a while. And when you come back, buy quality, okay? Buy quality. Don't buy the dog shit. Don't buy the Kathy Wood stocks, okay? For the most part, anyway. Yep, that's correct. It's a big scam. It's unfortunate, you know, and it's all by design, folks. All this stuff is by design. Okay, it's all by design. Just like, for instance, how you can't have national pride for your country if you're in the West. If you say I'm a nationalist, I have pride for my country, they call you a neo-Nazi. You see, and this is all about democratic, liberal. It's all about liberal democracy, right? It's liberal democracy. That's the problem. The liberal democracy. When you think about that, that's all tied into neoliberalism, which I believe has destroyed the Western world, right? Neoliberalism. You all understand all that, right? Yeah, that's why I left America. I got sick of all this garbage. You know, you have to lock your doors. You can't talk to your neighbors because they might be a psychopath, and you have all this crap going on. And you know, I mean, it's getting worse every year. The Western world is under assault. It has been for a long time. And there's really no stopping. I mean, there's many people leaving the West to go to countries that are not as, you know, the corruption's a different scale. It's a different type of corruption. You can have corruption everywhere, you know. But I can tell you, I mean, you look at America, and it's virtually impossible unless you have a very fast metabolism. I believe it's virtually impossible if you live in America, and increasingly, say, the UK, to live in America, and as you get older, to not become obese. Think about that. Everybody's obese, unless they like have a really high metabolism, or they're extremely fixated on not getting fat, and they exercise, right? It's just bizarre. This tells you, like, the excesses in consumption in this country. You know? Right? And, you know, honestly, these people that are obese, it's not their fault. I don't see it as their fault. This is a system that we live in this country. If you live in America, chances are very high, past 30, or past 40 anyway, you're going to be obese. You have to work extremely hard, mentally, and maybe even physically, to avoid the obesity trap in this country, right? So, you know, anyway. Bigfoot, yeah. Anyway, folks, I'm gonna head on out here now, and you know, and I'm sure there's some lurkers here hiding. You know, some of these guys that I've been talking about, or maybe some I haven't talked about. I've only mentioned like 2 names really, right? Or maybe 3. E. Kevin, Tom Nash. I'm sure there's some others here lurking around. Folks, call these people out, right? Remember, ask the question: how are you qualified to be talking about something as important as investment advice? This is a very important situation. How are you qualified to do so? If you're talking to somebody at a coffee table in your privacy or something like that, it's a different story. When you're going on a global platform and you're doing that, okay, and you can imagine you've got like all these guys following each other, right? You can imagine, I can guarantee if you look back, you know, a year ago, you had all these people basically pumping, most of them anyway, pumping the same stocks, and they were the Cathy Wood stocks, right? In fact, I should make an index. I should make an ETF, an inverse ETF about the pricing of the stocks that I've heard about from these YouTube people. It's too late now because most of them have been collapsed, right? Like, I never heard of SoFi and Affirm and Upstart until I saw YouTube. I never heard of it. But I sat there and watched them collapse. And they go lower, probably. You see? I never heard of this stuff. Right? I never heard of most of these stuff. And it's funny, like, nobody talks about blue chips. Blue chips have done very well. You can take a look over the past several years. But, you know, I guess most of these people, they arrived on the scene 2 years ago. Perspective is key, folks. It's critical. Okay? I mean, take a look at the Dow 30. I'd say, you know, maybe if there's one stock on the Dow 30 that I would say is dog shit, to some degree anyway, I would say Walgreens. You know, Walgreens has been in the dumps for a long time. And it's, you know, based upon how they position themselves for the future. CVS has done a whole lot better, and they've positioned much better. Of course, they bought the health insurer. Walgreens will probably get it together at some point. But until they do, I mean, they're paying probably a dividend that's over 4%, maybe 4.25% or something. Everything else, you know, these are all solid stocks. But even solid stocks can get steamrolled. Because what happens is that not only do you have a contraction in peak multiples when you have the interest rates go up, right? But you also get what? You get a lot of fear and panic selling and throwing in the top, right? And also you get people dumping indexes, sector funds and so forth. So you get mass dumping of stuff. So that there's no fundamentals. People are not looking at fundamentals anymore, really. And it's funny, by the way, let me just mention one more thing. It's funny. It seems like some of these people, including Tom Nash, they talk about their discounted cash flow method or model. That's all a bunch of bullshit. I did a video on that. I don't look at that garbage. That's nonsense. That valuation methodology is in a vacuum. That's like theoretical, right? And if you're going to use that, you have to constantly update it based upon earnings. Not just earnings, but earnings revisions, right? Also other things that come out. So you have to constantly, because there's a lot of things that come out of companies, not just quarterly, but in between. What's more important is to understand what a company does, understand their market position, understand the potential market size and growth, right? Understand the competitive strategy, understand the strength of management. That's what's called qualitative analysis, okay? That's what I focus on. Quantitative analysis is looking at the numbers, okay? I look at numbers as well, but I don't focus on that. Why don't I focus on the financials? You can't, like, why would you focus on the financial statements? I mean, I gave an example of things I look at, but why would you focus on that when the companies have so many tricks, right? They have so many tricks to manipulate things. It's impossible to really rely strictly on the financials. It's more important, especially if you're longer term, to have a vision of the company, you see, and to understand the strategy, the developments that are going on. That's much more important. Valuation obviously has a play. It's important as well. You know, if you buy a great company at the wrong time, you can be down for 10 years. And during that 10 years, it's easy to say, well, shit, I made a bad decision, I made a big mistake. This is terrible, because you're focused on the price, you see. So, you know, I think that's if you want to find really great companies, I think you want to focus on qualitative. The qualitative is a lot more difficult because it's more judgment. But, you know, I just think people that are using discounted cash flow, hey, if you're going to, why would you, like, listen to some clown on YouTube? If you're going to go by that, just you can get free research from, like, these online brokers, like Fidelity, Schwab, E-Trade. They provide free research. You can get their discount. Why would you go through an analyst? Like, the analysts are kind of a joke, but that's kind of relative to my view for what I provide. But when you compare a Wall Street analyst to some YouTuber, that's not even night and day. The difference is even more extreme. So why would anybody listen to somebody on YouTube, right? But you see, you've got some people, of course, their strategy is to come and tell you that they used to work as a top four Wall Street firms as an analyst. Meanwhile, they're really doing internet marketing, and they were never a Wall Street analyst. That is fraud. And that's why I'm willing to I'm willing to hand Tom Nash $10,000, 100 Benjamins, if he can prove to me his claims. And he's got several claims, by the way, that I mentioned earlier. He's backing off of these claims. Before, he mentioned that he had an MBA degree. I can guarantee you he doesn't have an MBA degree, unless it's through University of Phoenix online. Okay? There's no way. I don't even think he went to the University of Michigan, which, if that's what you want to tout as your big thing, wow. Why is he wearing his Michigan shirt every single day? It's kind of a subconscious thing, right? Irrespective of any of that, the guy's completely clueless. Absolutely clueless. And, this is what he's doing. This is why I come after him more than, say, me, Kevin. Maybe I'll go after me, Kevin, more in the future. What Tom Nash is doing, he's making these claims as a way to make money. And if these claims are not true, it's pure fraud. Now, Tom, I believe, is hiding out in Tel Aviv. He's in Israel. So he probably feels protected. It's just disgusting to me. But once again, it's a circle jerk. A lot of these guys, they're in the same circle, folks. Just all you got to do, if you want to see the whole army, see who they hang out with, okay? See who they're rubbing shoulders with. It's a big network, I'm telling you. I knew this. I know how this stuff works. I saw the same thing when I exposed all these gold pumpers many, many, many years ago. It's the same deal. Remember, con artists work in networks. They work in syndicates because the impact is much stronger that way. So if you're in a network, if you're a con man, and you're kind of rubbing shoulders with other con artists, the audience is going to kind of stick with your stuff, and they're going to veer off into other stuff. They're going to veer off into your network. So they stay contained in that whole disinformation network, and they can never break out and see what's going on. See, that's why they do that. FYI. So, yes. Well, Jesper, by the way, did you take a look at the video that I made a couple months ago? I think it was probably on Palantir. Well, I don't think I'd label it Palantir. It was a Tom Nash video, and I actually showed how Mr. Karp unloaded more than $1 billion, I think it was, of Palantir stock last year. And during that whole time, you didn't hear anything about it. Nobody on YouTube was talking about it. I can tell you, I don't recall ever seeing a bigger dump in my life. I don't recall ever seeing a bigger dump in my life for a company, especially in its early stages. It's unbelievable to me. And I think, well, if you watch the video, then you remember me saying, I'm suspicious whether or not Alex Karp and Peter Thiel have some type of a romantic relationship. Right? There's something going on there. He was responsible for granting him those shares. The company just went IPO. He's dumping $1 billion, more than $1 billion, within less than 2 years, and no one's saying anything on YouTube about it. In fact, you have people pumping Palantir telling you it's going to be $1 trillion company. And by the way, the Palantir expert, Tom Nash, he tells you that he doesn't really know what it does, but they do great things. And he says, watch the videos. If you don't know what they do, watch the videos on YouTube. And I'm like, what? Watch the videos on YouTube? You should be looking at the 10K, the 10Q. I mean, what's going on here? Do you want people to invest in a black box? This is all very weird to me. It's a weird situation. Oh, wow. He's got options to buy. Well, you know what? Those options may very well come in handy. I have to believe, honestly, based upon what I've seen and looking at Karp, I wouldn't be surprised if, I'm not predicting this, but I wouldn't be surprised down the road if SEC gets involved. I wouldn't be surprised if there's some type of shenanigans going on with Palantir at all. Okay? Because, and I don't know much about it, and I actually traded myself a while back when it was flying high. But just a momentum trade, that was it. But so I don't really know much about it. All I know is that this stock, more than any other stock that I know about, has been pumped up based upon a black box, right? It's kind of a what do you call it? Urban myth, right? It's kind of an urban myth stock. Okay, tell me, what exactly do they do? Show me, right? And as I mentioned in one of the videos, you would think if Palantir is this company that's so valuable for the CIA and the U.S. military, don't you think the stock would be taken off with the war between Russia and Ukraine and the increasing geopolitical aggressiveness made by China and East Asia? This is their best time, it should be, right? Yes. Well, I can tell you that 7 is not the bottom. It's going a lot lower, I would say. And I can tell you right now, in fact, if you just look at the market in general, I would say Palantir is going to go substantially lower. If Palantir continues to do poorly, then these $1 options might very well. I would not be surprised to see this company doing a reverse split in a few years. It's easy for people to not understand what valuation is when you're looking at companies worth almost $3 trillion, right? Like Microsoft, I think, was once worth nearly $3 trillion or something. You're looking at companies in terms of trillions, and then you look at these companies, the newer companies. Oh, it's only a $20 billion market cap. Where I was raising the red flag. A year and a half ago, with Zoom, with Peloton, I was like, this is insanity. I even actually, in one of the webinars, even raised the red flag for Samuel Adams, the beer company, SAM, when it was like $700. I'm like, this is insane. This thing is going to collapse. So, at some point, folks, you look at these stocks, they can't just keep going up higher and higher and higher. There's something obviously going on, right? And, it's you're seeing now the other side of that, the other side of the coin. Yeah, honestly, so Demodorian is, his stuff is good. I've actually got a few of his books. The problem, though, is that I think that, the type of valuation that he teaches and writes about is really better for the private markets. Because when you're dealing with the public markets, these valuation methodologies, they don't often hold up because you're dealing with an auction place, you see. So I think that those types of valuation metrics Same thing for this kind of cash flow. Much better for private companies not in a public market, because when in a public market it changes everything. You see, but watch videos. He's got videos on YouTube. Watch his videos. Why are you watching these YouTube people? So, Mr. Kim, I don't know Justin O, but I'll just go ahead and tell you that if I look at every person that someone says, oh, well, this seems like a reasonable person, a credible person, I can just tell you that, show me a channel that's, well, once again, what's his credentials? Give me what are his credentials, right? What are his credentials? You see, credentials are important, right? What's his credentials? What's his track record, right? That's the key. People don't ask these questions anymore. They just look at how many subscribers, how many likes. And this is why the whole fake like industry is a huge multi-billion-dollar industry. People buying likes, they're buying subscribers, they're buying even views, right? Can I tell you this, by the way? Even me, with this like minuscule, almost non-existent channel, I have gotten already emails from people trying to sell me, like, marketing their fake likes and fake reviews or fake subs. Yes, even me. So, yeah, I mean, that's the thing, Look, folks, it's all about perspective and context, okay? And the problem is I actually got one email by some guy who said something like, he was telling me, oh, I don't use critical thinking, and yeah, okay, he knows more about critical thinking than me. And how basically I need to post a list of people that are good, not just the ones that are bad. Make it sound like they're all bad. Let me explain something, folks. Yeah, they are all bad. You know why? Because everyone out there is a learning process. Some of you, and you can think to yourself, by the way, if you go back maybe 6 months ago or so, you think back how you were before then and say, well, gosh, I used to think that such and such knew what was going on. This guy's a clown. He's always talking about, right? Why? Because you've learned since that time. You've learned more about what's going on. It's similar to the analogy that I gave a while back on one of the videos where, I used to think that, I used to try and increase my knowledge. I got my hands on as many investment books as I could find, right? Ty Lopez, I'm reading so many books, knowledge. What a joke. And then I realized later on, like, I didn't know anything. So of course I'm thinking like, yeah, this is a good book, because I knew nothing, right? But then once you become more advanced, you realize those books were garbage. They were just generic trash, you see? And you get to a stage when you realize that you've got to reach a level. If you're going to try and invest instead of going with the indexes, you got to get a competitive advantage, right? But all the stuff that you're hearing, these guys, not only are they, there's a lot of misinformation, but just assume it's generic, basic stuff. It's not good enough. You've got to tap into someone that knows what's really going on. Because remember, this is a competitive game. You got to be better than a lot of people. You need a competitive advantage, you see? So some people who think like, oh no, there's some good YouTubers, they're really good. It's because you probably don't know much. And for you, yeah, you're learning. But in the bigger picture, it's not enough, right? You can learn so much more and still get slaughtered because you know so little. You understand? And all I can tell you is, you don't really appreciate that until you've achieved a level, you've achieved a high level. So you're probably not going to achieve that. And given that, you should just believe what I'm saying, okay? I've worked in this business full-time, overtime, for a long time. And if I wasn't positioned in this business like I was, I don't think I would have learned. I wouldn't know as much as I know, I wouldn't. But it enabled me to, and it actually inspired me, to learn. Because I felt responsible for my clients, which, that's not really part of the game on Wall Street. It's not what you think it is. A lot of people are, they're idealistic about it. It's a sales job, is what it is. And once you realize that, then you try and develop some skills and position yourself differently. Almost nobody does that. I was a rare individual. Okay, I can tell you that right now. I was very rare. It's probably because of my background. But and I even learned probably a lot more once I left the street. But I had developed a foundation of understanding the game. When I was working on Wall Street, I never, a lot of these guys that get the Wall Street Journal every day delivered to them, I never got that garbage. And they all play CNBC in the office and stuff. Back then, I didn't really understand the financial media. I thought that they were I didn't realize that they were complete scammers in the financial media. I just thought that they were just stupid and irresponsible and just morons. I didn't realize that there's actually a game going on, where there's a lot of money being made and a lot of manipulation, you see. Because you don't, I think that, unless you've been exposed to something like that, that devious before, you just don't think that people are going to be that screwed up. At least I didn't. Of course, for me, going from science to Wall Street was an enormous change. And a wake-up call, I was kind of blown away with the mentality of people. Very kind of screwed up, morally bankrupt, really strange, completely bizarre. I can tell you, from what I was used to anyway. Probably I was sheltered. But it's all about who you come across, right? They say, although I don't fall for it completely, but to some extent I believe it. And that is, all kids start out being innocent, right? It's their experiences, their environment, their parents that determines kind of how they are. And I see that to some degree, to a large degree actually, right? So if you haven't encountered that type of devious atmosphere, then you might not be aware it exists. But the world of business and finance, it's cutthroat. The people are sharks, man. You can't even trust your own employees. Like, you're afraid they're going to steal your book of business. That's how it is, or that's how it was at Bear Stearns for sure. I can tell you that right now. Well, Jesper, I wouldn't bet. I would not bet against that statement, but I'd like to see some evidence, because if I had evidence of that, boy, I have a direct line to the SEC. They know me very well. There's something going on with Palantir. I can tell you that right now. There's something weird going on with this company, and I wouldn't be surprised if the SEC wasn't investigating them down the road. Something strange is going on. Something really strange. I mean, honestly, it appears to me as just kind of like a piggy bank for Karp and Thiel to just raid. You know, I showed the video where Peter Thiel, he dumped over $500 million in one day of the stock. You know, and of course Karp over $1 billion. Consistently, like every month, $100 million. I mean, and you look at the guy, right? This guy, sorry, but you know, one of the things I focus on is management. This guy's a weirdo. He's not even qualified to run that company or any other company. Sorry, everything I see about the company, as I said before, I'll pass. You can have it. You know. Yeah, Kathy Wood, by the way, Kathy Wood, did she sell out of her Palantir position completely? Did she get out of that? Can you imagine? Can you imagine what's going to happen to Kathy Wood's fund when Tesla takes a hit, right? And by the way, you know, that's the amazing thing to me is that like Tesla now has a lot of dependence on China, right? You know, and they cruise through this current lockdown in Shanghai, but I don't see the Chinese government retracting their zero COVID policy because they don't want to lose face. You see, Asia is losing face is a big deal, and this zero COVID policy has kind of become an unofficial, kind of a, well, it's kind of an unofficial policy of the CCP now. I don't think they're going to backtrack on that because it would expose them for the idiots that they are. You see, so imagine if you're reliant on China. Yeah, I don't know, man. Honestly, let me just tell you about, I don't know what those designations are, FRIMC, I don't know what any of that stuff is. I can tell you that, honestly, I think the best thing you can do, look, everyone's going to be different. I think some people can excel in the markets if they work hard and spend a lot of time and preferably have guidance, good guidance. But it ultimately depends upon the individual, the judgment, their intellectual capacity, creativity. I think creativity is a huge thing, man. The market is not a science at all. But I just think that, listen, I didn't have any programs. I didn't go to business school. I had a book I wrote that's used for an MBA program. I never even went to business school. I never even took a business course. Did I learn stuff on my own? Yeah, I did. I was able to learn stuff. There's a lot of crap in finance and economics and business. There's a lot of garbage. You can pick and choose. You get some useful things out of it. That's what I did. But really, the best thing I think to do is to just immerse yourself in the market and stay away from trash. You know, stay away from commentary. And I've mentioned this to people before. Even the newswires like Reuters and Associated Press, they're not even reliable anymore because now they're in commentary. They're giving opinions and analysis. So I would stay away from all, if you don't know what's going on, obviously you're going to read an article, or you're going to listen to someone, they're going to talk about stuff, and they're going to sound confident, and you're going to say, wow, I'm going to listen to this person. I'm telling you, folks, it's all garbage. It's all trash. I'm telling you, this is from 3 decades experience. I'm telling you, it's trash. The sooner you realize all the crap out there, and obviously if I'm talking about the financial media, it means that times a million with YouTube. Once you realize that, you're going to have more time, more effort to develop on your own, okay? Develop on your own. Stay away. The people who know me, my customers, they know my first slogan is stay away from the financial media. And also I say ad-based content is a scam. Ad-based content is a scam. It's just think about it. People that know me know I've been preaching that for over a decade. And so I'm just telling you, from what I know, if there was a source out there where you could consistently find out what's going on, hey, it'd be great for me. I'd love it. They're not out there. The whole game is for the media to convince you that Jim Cramer is some former successful hedge fund manager, and he's got the goods. He's going to help you get the goods, right? The idea is to convince you, that Warren Buffett, he's the best investor. He's a genius, right? So when they interview Warren Buffett, you go and you listen to the interview. That's more advertisement dollars for them, right? You understand? When's the last time you heard anybody in the media criticize Warren Buffett? There's a lot of criticisms we can give Warren Buffett. I need to take the time to do it. I can smash the guy. I hope to do it before he passes away, because I don't want to be accused of slamming him when he's dead. Warren Buffett has made so many blunders. He's broken so many basic rules of investing. It's shocking to me, right? Shocking. I'll give you one example. I've mentioned this before. First of all, I wrote in a book, one of the industries I would never invest in is airlines. It's a terrible investment, right? Terrible investment. Why? Because first of all, you've got government regulation. Second of all, you don't build any equity. The whole airlines industry is on operating leases. They don't even own their planes. It's just basically a transactional investment. It's garbage. I'm not going to invest in that. You see, it's a terrible industry. But Warren Buffett comes in the pandemic and he invests in the airlines, right? And think about it. Not many people thought they wouldn't even invest in the airlines. Warren Buffett was ready to go. So did Warren Buffett think, okay, I'm going to invest in Southwest or Delta because that's the most fundamentally strongest of the 3 majors, right? 3 or 4 majors, whichever. That's the strongest. No, he bought all the majors. Did he not? Why? That tells you he's clueless. You don't do that. He bought all the majors to cover his ground, to make sure he was all in. You see? So he didn't even pick the best one of the batch. He wanted in on that. And of course, it was a terrible decision. I don't even know if many people even bought the airlines during that time. That's how bad it was, right? And then of course he had to sell, right? Warren Buffett is so concentrated in Apple. Does it make sense to you, right? To be overly concentrated? What's his position in Apple? 50% of his portfolio? Excuse me, one of the main reasons why you want to invest in a fund is because it's diversified. I mean, the golden rule is you never want to buy more than, let's say, we'll be aggressive. We're going to say we'll be aggressive. You don't want more than 10% in any one position, okay? I mean, look at funds. You're not going to see more than, he's so overloaded, right? And there's so many ridiculous mistakes that he's made because he's desperate. He's out of the picture, right? He doesn't know what's going on. He hasn't known what's going on for a long time. Warren Buffett made most of his money a long time ago, number one, when there wasn't much competition. Okay, 50 years ago, 60 years ago, understand, access to the stock market was extremely limited, first of all. Okay? It was extremely limited. Second of all, access to the private markets was even more limited. Okay? It was very easy to make money if you were a player back then, I can assure you. Number two, most of his money that he made was in private transactions, was in private companies. Okay? I think Warren Buffett is a much better investor when it comes to private investments because the traditional valuation methodologies are much more accurate for the private transactions. And I've worked in the private market. I've worked in private equity and venture capital. But Buffett made his money back then. You know the saying on Wall Street? What have you done for me lately? Well, take a look at what Warren Buffett's done lately. A lot of blunders, man. A lot of blunders that a guy who's been an investor for what, 70 years? 80 years? All that experience? He's got a huge fund. He's got unlimited access to the top minds in the world, the top analysts, the top deals. He's got so many advantages, and he makes so many huge blunders. Is that fair? For me, I think it's a fair critique of Warren Buffett. Not to mention the fact, the secret, by the way, Warren Buffett's secret, is you want to make money, you don't look at what Warren Buffett invested, because you're just going to look at the Dow 30 for the most part. What people don't talk about, aside from the fact that he hasn't beat the S&P over the past 16 years or so, 17 years, because remember, if you're going to use the S&P as a benchmark, you've got to reinvest the S&P 500 dividends, because Warren Buffett doesn't pay dividends in his fund, although he should. It's a value fund. He reinvests the dividends, right? So you have to reinvest the S&P dividends into the S&P in order to get the proper benchmark of the S&P. Second of all, what Warren Buffett doesn't tell people is his real secret. He's just dollar cost averaging. That's what he does. That's why he doesn't sell dog shit, right? Aside from the fact that Warren Buffett buys a lot of times the shittier stocks, he thinks he's getting a good value. Why didn't Warren Buffett buy BlackRock and JP Morgan and Visa? Now, instead he has American Express, Bank of America, and Wells Fargo. Those are the dog shit names in that sector, right? The reason why he still holds those is because he bought them a long time ago, at least Wells Fargo and American Express, okay? And he doesn't know when to stop, when it's time to cut the cord. You know why? Because he just dollar cost averages. You see, that's why he owns Geico, the insurance company. Insurance companies are cash flow machines. He owns Geico because it provides him with a constant pool of cash to cover up his mistakes. So when he buys high, he just buys more. You see, that's also a reason why you can't compare. You can't even use the S&P as a benchmark. There's so many reasons why Berkshire Hathaway you can't benchmark it to the S&P. But even still, he doesn't even do well versus the S&P. You see, everybody understand what I'm saying? So why aren't you hearing these critiques? My critiques are not harsh. They're pretty basic and simple, and I think they deserve responses. Why has nobody in the financial media mentioned these things? Because folks, it's all a game. It's all about them versus us. They want your money, right? They build superstars. You know, in a preface of the book I wrote, it was all about Warren Buffett, and I talked about how the media, it's kind of like a Britney Spears effect. You know, they build up a person, like what they're doing now. CBC's been doing this with Kevin O'Leary. You know, like he's an investment expert. This guy's a clown. He's a joke. He's a scammer. He's a bullshit artist. He's a con man. This guy didn't have a pot to piss in until he got on TV, and he's been leveraging and building business based on his media celebrity. That's what all these guys do, by the way. Okay, all these guys do that shit. And by the way, let's not forget Kevin O'Leary. He's in the same clan and the same crew, right, as Graham Stephan and Kevin Paffrath. Kevin O'Leary promoted these guys on CNBC. He's responsible, in large part, for these guys. You understand, folks? Kevin O'Leary is such a stooge and a low-class loser. If you pay him like $1,800, he'll actually pitch your company and say, "Oh, it's a great company. Oh, you're great." I mean, folks, this is the financial media you're talking about, okay? They're a bunch of scammers. They're a bunch of scumbags. The same business model. What do you think YouTube is? YouTube is media, ad-based content. I mean, it's actually much worse than traditional media, right? It's much worse. So, anyway, folks, I'm just telling you, honestly, the best thing you can do for your life, for your future, stay away from the media. People that know me know I preach this. The media is a destructive disaster. It's a criminal operation. YouTube is media, okay? By the way, stay away from all media, all ad-based content. Stay away from the whole financial media, all the YouTube garbage, okay? If you want to make money, the time that you spend consuming all these losers and con artists in the media, you should spend that time improving yourself, bettering yourself, or enjoying your life. Maybe, if you took that time that you're spending watching these charlatans, right, steer you into the sewer, if you took that time instead and focused on your career, maybe you'd make a lot more money, right, if that's your goal, you see? Yeah, well, I'll tell you, Jasper, I think certainly over the past couple of years, I think that's that's probably, I wouldn't discount that. I don't know, but I wouldn't bet against that based on what I've seen. It's a pretty scary situation, I can tell you that. And I mentioned this many times before, folks, these situations don't end nicely. There's not a happy ending. When you have this type of situation, YouTube is a great example. I mean, you don't need to know anything about the market, nothing about valuations. You need to know nothing about the economy, nothing. If you're an old timer and you've been around and seen how these things go, and you see what's going on YouTube, you know what's coming, okay? You know what's coming because the world doesn't work this way. You don't have people that become instant experts overnight without any experience or expertise. And people making money hand over fist. It doesn't last, okay? And when payback time comes, it's devastating. That's just kind of how things play out. Doesn't even, aside from everything else, doesn't matter what's going on in the economy or anything. This is the way things play out, okay? It's just common sense, I'm telling you. If something sounds like it's too easy, and it's because it is, and it's not going to last. That's just the way it is. Yeah. So Jasper, you've learned now, right? You know the deal now. I mean, you look back, you lost money, but you know what? If you've learned, maybe it's an expensive lesson, but you've learned. Some people will not learn. They will never learn. They won't know. The most important lessons typically, I think, are lessons where people pay a heavy price, you see, because they learn. Give you an example, by the way. I have a buddy, a long time ago, this is like in the September attack, September 11th, right, in the World Trade Center, 2001. After that, you can imagine what happened to the airlines, right? Airlines collapsed, of course. And I had a buddy who, he didn't really know what was going on. I mean, he was in the financial industry. He was working with 401k plans with Fidelity. And so he bought American Airlines stock for, I don't know, like $3, $4. And, you know, you gotta understand, when you have something like what happened September 11th, the World Trade Center, this is a very unique situation. Things can happen. It's not the typical situation where all the airlines are gonna be down. I mean, it's a very risky situation for the airlines, right? As you can imagine. Because, of course, after that, you had the whole the war on terror, all the security checks and all the garbage, the airport, people didn't want to travel. But anyway, my point is that he bought the stock. And then he made he sold it, made 300%, 400% something. And he thought he was a stock genius. And he didn't understand. You see, what happens is the worst thing that can happen to an investor, especially a newer investor, absolute worst thing that can happen is to get lucky early on. Oh boy. Because when that happens, or even let's say during this period, mid-2020 on, to get into the market then, the worst thing that can happen to you, because you don't have a sense of reality. You think that you know what's going on, and you're great. And and what ends up happening is, the longer this goes on, typically the bigger the price that you pay. You see. And what my biggest concern for investors is there's going to be so many people that get blown out completely that they never invest again, and they miss out on a lot of great returns in the future. Because I saw it happen. I saw it happen after the dot-com bubble. There were so many people that were devastated. They just never went back to the market. And I think it's safe to say that when you have big blowouts like the dot-com or even the financial crisis, you lose people just never get back into the market. You see. So. Yeah, well, China's also, of course, they're rolling out the red carpet for Tesla because they want to steal from Tesla, just like they steal from all these other companies, of course. But obviously, it's going to be interesting to see Elon Musk, the con man. He's about as emotionally mature as Donald Trump, which is kind of worrisome. It's going to be interesting to see what he does with Twitter if he ends up buying it. With respect to China, right? It's going to be pretty interesting there because Elon Musk now is pretty much owned by the CCP. Okay, he's pretty much owned by them, and we'll just kind of have to wait and see what happens there. But I can tell you though, by the way, it's interesting if you look at the Chinese securities. Boy, things aren't looking too good, and I can tell you that honestly, I wouldn't be surprised down the road if the U.S. regulators were told by Washington to delist all the Chinese companies, because I don't know if you all know this, but there's been a heightened awareness and a heightened energy in Washington, and this is beyond Donald Trump. There's a contingency in Washington that is beyond the party rulers. We're talking national security, okay? And there's a heightened awareness and heightened focus on China in terms of national security, and including, by the way, there are hundreds of cases of espionage. Go on the FBI's website, by the way. Just type in China espionage, FBI, and you'll see, last I checked, there were 172 cases of espionage reported by the FBI. We're talking about China coercing, bribing, stealing intellectual property secrets from GE, Turbine, a lot of things. And of course, when you're talking about Chinese securities, raising capital, so you have to understand, Chinese companies in China, they have very limited means to raise capital, okay? Most of the capital that goes to Chinese company support, they're strictly state-owned companies, state-owned enterprises, SOEs, okay? So other companies that aren't maybe not as controlled by the state or partially controlled or smaller, they're trying to gain an edge. They need external investment. So it's important for them to list on foreign exchanges to gain that access to funding, you see? And this is why, by the way, even the large companies, I think, has the Chinese petroleum companies, have they been delisted yet? The petroleum companies of China, right? Think about it, you've got these companies, China Aluminum, right? And the petroleum companies listed on U.S. exchanges. You have U.S. investors funding operations tied to the military of China. Think about that. This is shocking to me, right? It's pretty shocking. And if you look at Huawei, by the way, Huawei, you all know that was a big deal, but there's fine, right? Huawei, if you look into the company and if you see the history, Huawei actually, and where did Huawei come from? Like, they came from the middle of nowhere in a few years to become, one of the largest 5G players. How? How did this happen? There's no innovation in China. China has zero ability to innovate for many reasons. I'm not going to get into that. They steal, they copy, right? That's how they get innovations. They steal and they copy. And Huawei, actually, anybody from Canada here? Anyone from Canada? Canadians? Anybody? Well, for my Canadian comrades, some of you might remember a long time ago, this was a darling of the dot-com bubble. Anybody remember Nortel Networks? Nortel, right? The networking company. Nortel Networks, based in Brampton, Canada, right? That's a suburb of Toronto. Nortel Networks was a major player of telecommunications networking equipment back then, okay? Publicly traded company, huge company. They had a large presence in the U.S., global major player. Nortel, and I actually dealt with Nortel on Wall Street, Bear Stearns. I was dealing with the Treasury Department on helping them liquidate some of their venture investments. But anyway, and it's funny because I remember actually I was on the phone with the treasurer. We were talking. He was like panicking. This is when Nortel was going down the toilet. It was kind of amazing. He was all worried about because Nortel collapsed. Nortel went bankrupt. But anyway, my point I'm trying to make is that Huawei stole a lot of the intellectual property from Nortel a long time ago. That's how they built up Huawei. In fact, you all know WeChat, right? the Chinese WeChat, I believe it was WeChat, they got the backbone of WeChat, the Chinese, Tencent, they got WeChat. They actually stole the ICQ backbone. You all know ICQ? I think it's from Israel, their chat platform. ICQ, very old. They stole that. You all know what I'm talking about? Anybody? Yes, no? So China cannot innovate anything. Yeah, ICQ was one of the first Israeli technology. They stole that. That's the basis of WeChat. So they steal everything, right? Think about this. As I mentioned before, DJI, right? The drone company. DJI is either a military company of China or working with a military company. There's no doubt about that. And think about it. Drones aren't used for military? Of course they are. So people buying DJI equipment are funding the military operations of China, right? I mean, folks, if you don't believe me, go do some research. This is not rocket science. I'm telling you, I know this for a fact. So what I'm saying is that things are heating up. You all, some of you maybe, I don't know where you all are. You know, I mean, I sense this stuff in Southeast Asia. I see this stuff all the time. China wants East Asia. They want all of East Asia. Okay, they want all of East Asia. They claim the entire China South Sea. They claim all of that. They have man-made islands. They're fortifying them with military equipment. Well, those man-made. You don't hear about the man-made island situation. They're now working with the Solomon Islands to fortify a military base over there. Okay, China is preparing. Believe me, China is preparing for military operations. I'm telling you, and they may very well be working with Russia. Okay, you can imagine. You've got two adjacent communist regimes. Russia's not officially communist, but we know, I mean, certainly they're authoritarian. And the problem with Russia and China is Vladimir Putin for Russia and Xi Jinping. These guys are the problem. These guys got to go. They have to be removed. They are a big problem. So they've been working. Of course, China's been working with the Belt and Road Initiative for many years, which was announced in 2013. Right? You all know the Belt and Road Initiative. You all know about this stuff. I'm telling you, I know the deal. China is. There's a couple things about China people aren't aware of. Number one, China's economy is much weaker than people think. And in addition to that, the data is fudged in China. The economic data is fudged. In fact, in this presentation I'm going to be giving in a couple of weeks, I actually show, you can look it up, there's officials that admit their data is fudged. There's even officials, can you imagine in a country like China, a communist country where like people disappear and are like executed, that, you know, thousands of executions every year, that forced labor camps, right? Where an official comes out and basically says the data is fudged, you better believe it is, if he's willing to risk his life saying that. So can you imagine, right, the risk there for China? You know, you mentioned Muddy Waters. Muddy Waters is similar to Citron. Citron, which is, these guys are scam artists, by the way. They're market manipulators. They don't even pay attention to those. Matter of fact, Citron, I exposed this guy. What's his name? Scumbag. He looks like a felon. You see this picture. What's the guy? Citron. What's the name? I forgot it. But anyway, he's a market manipulator, and I exposed how actually he's working with Bloomberg. Like, clearly, I actually contacted the SEC a few years ago about it. It's obvious what he's doing. Muddy Waters is similar. That's Carlson Block. But these guys are market manipulators. In fact, Citron is, he's banned from Hong Kong for insider trading. And I think Citron was raided by the FBI, by the feds. He was raided last year. I think it was last year or the beginning of this year. The feds raided his office for market manipulation. So he's no longer coming out and trying to short stocks and all this nonsense. I mean, folks, I know this whole deal. I mean, I know the whole cabal with the why is the financial media promoting this guy? He's a nobody. He's a clown. Because he's paying people, and there's this whole gang of people involved with the financial media and their buddies to manipulate stocks. I'm telling you. I exposed this a long time ago. Well, you know what's funny? What's funny, BP, so BP says you should expose the clowns on YouTube channel, everything money. Too many people follow their advice. They were shilling Facebook at over $300. Well, you know, look, anybody can make mistakes, things happen, that's fine, okay? I'm not concerned about that. What I'm concerned about is stuff that I see obvious. I don't know about these guys. I will tell you this. One of the guys from that channel emailed me. Remember, I'm a nobody channel. I don't have any subscribers hardly, right? Nobody, you know, they emailed me and they said, oh, you know, thanks for calling out Tom Nash. You know, we think he's a danger to investors.